Okay, good morning everyone. Welcome to Byju's Exam Prep IAS. This is Sham Kagod here. Now, before I start the discussion, if there is no issue with the sound, can you please give me a thumbs up? If there is no issue with the sound, please give me a thumbs up. Okay, let's start. So, we have discussed, thanks a lot. Let's start then. Now, before I start, please read today's newspaper, Hindu. Right, please read today's newspaper. Sir, which article are you talking about specifically in the Hindu newspaper? Again, I'll stick to only economy here. There is one article on Adani Group of Companies. Adani Group of Companies. For UPSC, please don't read what is Adani Group, right? Who is the owner, right? How many owners are there? What is the net worth of the owner, etc., etc. That is not at all relevant for UPSC. Please do not waste your time there. But in that context, what you're supposed to read and understand in that article, please read about, let's say, the concept of FPO. Again, please read. If you don't understand, no worries, absolutely no worries, don't worry about it. Anyways, we'll have a discussion about IPO, FPO later when I take a financial market. But for just sake of clarity, just to understand, okay, this is relevant for you, this is important, etc., etc., read that article. If you don't understand, don't worry, we'll have a discussion on FPO later. That is one article I want you to read. After that, there is one more article, second article. Second one is related to this, what is that? The budget, the fiscal deficit in the budget. Now, many of you who are attending the economy for the first class or have no connection to economics whatsoever, you might simply say, sir, fiscal deficit, I don't know, etc., etc. But please don't worry. All I'm trying to tell you is read that article. Even if you don't understand anything, don't worry. When I discuss fiscal deficit, it will be much more clear to you. Sir, when will you discuss fiscal deficit? Most probably next week. Right? We'll be covering budget as a concept and we'll have a discussion about fiscal deficit then. But nevertheless, right, these articles related to, let's say, Adani Group of Companies, again associated with impact on the economy. Then this article related to fiscal deficit. Then there is one more article, other states are worried. That is basically some of the projects associated with Adani Group of Companies might be shelved now. Other states are worried. That is a spillover effect, negative externality that we have discussed yesterday. So again, the argument is simple. Please read the articles. Even if you don't understand, don't worry. Don't enter into a panic mode right now. Some students I generally see, they will read the article, they will have a heart attack. And they will simply say, sir, I don't know anything in this. You might not know because we have not yet discussed the article in the coming days. Right? So the concept we have not yet discussed, but will be covered in the coming days. Please don't worry, but have a look at it. Now, coming to the topic at hand. Yesterday, we started with the GDP discussion, right? National income aggregates. In national income aggregates, we started with GDP. Now, what is GDP? Gross domestic product. It is the market price of all the goods and services which are produced in a country. Now, we can calculate, right, GDP for one quarter. We can calculate GDP for half a financial year. We can calculate GDP for full financial year as well. That is the second point. Third, how do we calculate GDP? There are three methods. I'm just going back to the yesterday's discussion. There are three methods to calculate GDP. One is the output or product value method, market price into the total number of goods and services which are produced, right? That is output method. Second one is income method. Take the sum total of all the factor incomes generated in an economy. You will get the GDP. That is GDP through income method. Third one is expenditure method. Again, basically expenditure method, we calculate the expenditure done on the final goods and services which are produced in India. But how do I do this? Total expenditure done by the companies, expenditure done by the government, expenditure done by, let's say, households. Take the sum total of it. From this sum total, deduct or subtract the value of imports that we have done, because imports means these are not produced in India. These are basically imported into India. So deduct it. To that you add the amount of exports that you have done. Right? Because the exports are done from India, these are manufactured in India, should be counted as a part of India's GDP. And whatever is the sum that you will get is called as GDP through expenditure method. Now picking from there, I stated at the end of the class, I stated that whether you calculate GDP through expenditure method, income method, or the output method, the value should be one and same. The value should be one and same. How do I prove that? How do we ensure that the value is one and same? For that, I'll take a very, very simple example. Just understand the example. Do you need to by heart the calculation? Absolutely no. Please do not by heart the calculation. UPSC will not ask you the calculation. But can they ask, should the GDP value be one and the same under all the three methods? Of course, yes, they can ask you that statement. Now, what is the methodology here? Simple. I'm assuming there is one country where only one good is produced and the good is sold. I hope you understand this. Sir, why are you taking one good? There will be thousands, crores of goods. Yes, you are right. But don't make it complicated. If you understand the concept, that is more important for you. Understanding the concept. So let's assume one good is manufactured. What is a good? Let's say this flask, water bottle. Now, in a country, a company will manufacture this particular, let's say, flask. Here is a company which is manufacturing the flask and selling the flask to a buyer in the market. But to manufacture the flask, the company will purchase raw materials. All of you agree? The company will purchase raw materials. And let's say the company B will purchase raw material from company A. Now, A will sell the raw material at 500 rupees to company B. Company B will take the raw material, convert that into a flask and sell it to you, right, who is a buyer, at 1000 rupees. Now, follow the sequence very carefully. Company A has used a certain number of labor units. It will pay labor 100 rupees and the owner of the company wants to earn a profit of 400 rupees. And that is a precise reason when A will sell the raw material to B, they will charge company B 500 rupees. This is step 1. Any difficulty in the step 1, let me know. Again, I'm not complicating the issue here. I'm keeping it very simple. A has taken certain good, that is, let's say, ore, iron ore, converted the iron ore into steel. It has sold the iron ore to company B. That is, the steel has been sold to company B. And in the process of selling it, they have used labor, paid wages to the labor, 100 rupee. Owner wants to earn a profit of 400. So totally the selling price will be how much? 500 rupee. Now company B has purchased the steel and now have a look at this. It will use that particular steel worth 500 rupees. The owner wants to earn a profit of 300 rupees and they will use the labor and pay, right, let's say 200 rupees wages to the labor. And as a result of this, how much will the price at which company B will sell it now? 500 is the raw material cost, 200 is the labor cost, and 300 is the profit. So total, the price at which the company B will sell it to, let's say, consumer, that is you, will be 1000 rupees. I'll call this as step 2. Now, before I go forward, any doubt in step 1 or step 2? Before I go forward, any doubt in step 1 or step 2? If you do not answer, I'll simply go forward. Okay, great. Thank you. Let's start now. Right, let's go ahead. So step 1, 500 rupees. Step 2, right, a company has used labor plus profit, total another 500. So 1000 rupees has been sold. The price of the product is that. Now let's start. This is a very simple equation. Imagine this is the only transaction which has happened in a country. This is only transaction, only one transaction which has happened in the country. Right now, how will you calculate GDP? There are 3 methods. I'll take all the 3 methods one by one. First one, the production method or output method. Right, in the production or output method, what do? We find out how many final goods and services are there in a country, that is in the economy. Now in this example that I've taken, how many final goods and services are there? Only one final good is there. One final good is there. What is the market price of the final good? One final good, market price of the final good is 1000 rupees. So have a look at this. The GDP through the production method. GDP through production method is how much? 1000 rupees. Second one, income method. Second one is income method. And how do you calculate GDP through income method? Find out how many factor incomes are paid. I repeat, find out how many factor incomes are paid by the company in the country and get the sum total of it. In fact, I hope you remember the formula for it. Income method is nothing but sum of all the factor incomes. Now look at this example. How many factor incomes are there? In the step 1, 2 factor incomes. In the step 2, 2 more factor incomes. Get the sum total of all of them. The labor is 100 rupee here. Labor is a 200 rupee here. So total wages will be 300 rupee. And I hope remember even the the profit is a factor of production. That is the factor income associated with factor of production. So profit in the first step is 400. Profit in the second step is 300. Total will be how much? Profit of 700. So 300 plus 700 is 1000 rupees. So GDP through income method is again how much? 1000 rupee. Third one, GDP through expenditure method. GDP through expenditure method. We need to calculate the sum total of C plus I plus G and adjust it with exports as well as imports. First and foremost, is there any export or import in the example? No, there is no export and import. Only one good is produced, and how much is the expenditure that is done by the consumers or the buyers in this economy? The expenditure done is simply 1000 rupees. Right? It is simply 1000 rupees. So expenditure done is 1000 rupees. I will simply calculate GDP through expenditure method, that is 1000 rupees. Where is services calculated? My dear, every company will submit what is the amount of revenue they have generated, how much sales they have done. I don't understand why do people always try to make it complicated. For example, if I calculate GDP through expenditure method, if you're going to spend 1000 rupees on a good or a service, does it make any difference? You tell me. Simple question to you people. Just think of it and answer. And frankly speaking, these kind of doubts are not required. I'll tell you why. I'm telling GDP through expenditure method. Now you tell me whether this is a good or a service. If you have paid 1000 rupees, don't you think GDP will still remain 1000 rupees? Don't you think GDP will remain 1000 rupees? That is very basic concept. Right? So the idea is simple. Whether you calculate for services, whether you calculate it for the goods, etc., doesn't matter. And you're forgetting something. Services, there will be involvement of humans somewhere. They will give you the data. Companies will submit the data. That is the reason I generally tell the students, don't become a statistician for this exam. Problem with the calculation is that you're trying to become a statistician. Not at all required. Right? The data is there. Companies will submit the data to the government. Right? For example, you have moved a good from point A to point B. Just think of it. You have moved a good from point A to point B. Now, don't you think when you sell the product, there is a component of services involved in the market price? Just think of it and answer. Just think of it. You will go to the market, purchase the flask. Don't you think when the market price is decided, component of services is already included in this? Sir, what if there is a pure service? Right? For example, I purchase a software. Then what is the expenditure that you have made on purchasing the software? That is GDP through expenditure method. It's a very simple concept. Do not try to complicate it. So now the argument is simple. You have calculated GDP under 3 methods. And what is the value of GDP under all the 3 methods? 1000 rupee. So that is the reason I said, whether you calculate GDP through production method or value addition method or right output method, doesn't matter. Or you calculate GDP through income method or GDP through expenditure method, value should be one and same. But out of all the 3, which is the most important one, which is the most credible one in India, it is the production method. Simple. The most credible right methodology of calculation of GDP is production method. Now, many of you will simply ask me, sir, why not income method? I can get it very easily. Why not income method? Problem is very simple. Imagine I'll come to your home. I will ask you how much salary you have earned. How much is your factor income? Answer it honestly. How many of you will give me the correct answer? I hope you understand. Right? Very simple. I'll come to your home. I'll ask you how much is your income. All of you, do you think you will give me the honest answer? Don't you think there is a problem related to collection of data there? That is the reason. So understand the logic here. There are three methods, but the most important one that you can use is production method. And our discussion will be surrounding the production method itself. Now, what is the production method? How do we calculate GDP through production method? Let's start. First one, there is a concept of base year. Now, before I go forward, we will not be discussing base year right now. We will discuss it when I take up inflation. Is it okay? I'll repeat it again because I know many students after telling this also will ask me a question again. There is a concept of base year. I will not take it now. I will take it when I take up inflation. Is it clear? I don't want to see questions again asking, sir, what is base year? Right? Again, the reason is simple. To understand the concept of base year, you need to understand inflation first. Without telling you inflation, I cannot tell you base year. You will be confused. You do not know completely inflation also, nor will you understand what is the concept of base year now. So, pakka, guaranteed, promise, I will take it when I take up inflation. That's the reason I've written in the bracket. We will discuss it later. Next, second one, many of you are worried, sir, how will government of India come to know how many goods we have produced? How many services we have produced? How will the government come to know? Simple. Government has set up a portal. All these companies which are listed in the portal, they will have to submit the data to the government. Is it okay? I'll repeat it again. Government should know how many goods and services you have produced. But question now is, how will the government come to know about it? The government has set up a portal where all the companies which are registered in the portal, they will have to submit what is the value of production they have done on monthly basis to the government. So they will not come to you. You will only submit the data to the government. But what is the methodology I'm talking about? What is the name of the portal that I'm referring to? It is basically the portal which has been set up by Ministry of Corporate Affairs by the name of MCA 21. Is it okay? MCA stands for Ministry of Corporate Affairs 21, MCA 21. In simple terms, it is one of the e-governance initiatives of the government, wherein companies which are supposed to be, right, or which are covered under this, they will have to submit the data to the government of India. Is the issue okay with this? Let me know. Is the point okay? Argument is simple. The government, imagine you are the government. You are supposed to find out how many goods and services are produced in India. Can you go to each and every company and get the data? That is very difficult for you. Rather than that, what you have done is, you have set up a portal, website in simple terms, and you are asking the companies to report the data, enter how many goods they have produced, what is the value of the goods they have produced. So you will get the data directly from the companies. You don't have to go and start searching for this particular data. So understand the logic here. We have introduced a system called as MCA 21 database, right, or MCA 21 system, wherein companies will report production data to the government. Right, that is the second very important point. So first one, I'll repeat it. First important point, the base year has been changed. I will not be discussing base year right now. We'll take it up later. Right now, the base year for the calculation is 2011 and 2012. Whereas, whereas earlier, the base year for the calculation was 2004 and 5. Please don't worry about base year. We'll take it separately. Okay. Now, after that, I said coverage. how you collect the data of production, we have shifted to a new system called as MCA 21 system, Ministry of Corporate Affairs 21 system, where the companies will submit the data. Now, before going forward, there is a question. Sir, how small service sector like barber, etc. will submit the data? My dear, understand this carefully. Whenever you read about GDP, and if you have read it very carefully, let me ask you a simple question. Is it simply written as a GDP or it is written as GDP estimate? Just think of it. Is it written as simply GDP or the GDP estimate for the Indian economy is this much? And that is where you will have to be very careful in reading the newspapers. Focus. They will write it as GDP estimate for a very simple reason. Understand this. We know that large number of service providers or even manufacturers in India are not registered. I'll repeat my point. Large number of the manufacturers, very, very small manufacturers or service providers, these are not registered, right? Basically for that, what we do is we'll conduct a survey. We will conduct a survey, and that is the precise reason they will say that it is a GDP estimate. Informal sector surveys are conducted. I repeat, informal sector surveys are conducted. So one system is they will submit the data, but we also know that there are many of these small companies, or let's say small manufacturers, small service providers who are not registered with the government. In that case, what should we do? We will conduct a survey and we will get the data. Done. And that is the precise reason we say, right, or we generally use GDP estimate. Now again, don't worry, right? Some of you are trying to simply enter into the optional papers here. Don't worry, just stick to basics. Just stick to basics. Next one is, earlier we used to calculate GDP through cost price. We used to calculate GDP through cost prices. Now we have shifted to market prices. I'll repeat it. Earlier, we used to calculate GDP through cost prices. Now we have shifted to market prices. Now, what is this idea of a cost price and market price? Let's start. Let's try and understand this. What do you mean by the cost price? Now, some of the books will use the term cost price, or else they will also use one more term, factor cost. And then there is a market price. Cost price and market price. Now, what is this idea of a cost price and market price? Yesterday, we've discussed the concept of factors of production. How many factors of production are there? 4 factors of production: land, labor, capital, and entrepreneurship. And for all the 4 factors of production, the company will incur certain amount of expenditure. So far, so good? Let me know. There are 4 factors of production, right? For every factor of production, there are certain, right, cost or the expenditures which are incurred by the government, or sorry, which are incurred by the company, right? The first one is called as, for land, it is rent. For labor, it is wages. For capital, it is interest. And basically for entrepreneurship, it is profit. Now, if I take the sum total of all of it, it is called as a cost price or factor cost. It is called as cost price or the factor cost. Done. But please understand, when you have manufactured a product, incurred so much amount of expenditure, you might also get certain amount of subsidies. Important, remember this. I'll define it, just give me a minute. You might also get certain amount of subsidies. And in addition to subsidies, there is also a component which is called as taxation. I will use a technical term, indirect taxation. Do not worry about indirect term now. Just understand the term taxes. For example, let's say I'll take a very simple number so that you understand this. For manufacturing of this product, that is a bottle, the factor cost that I've incurred is, let's say, land, it is rent. On labor, it is wages. It is interest on capital. And finally, it is profit on entrepreneurship. Let's take simple numbers. 10 rupee, 20 rupee, 30 rupee and 40 rupee. Done? 10, 20, 30 and 40. So total cost price of the factor cost is how much? 100 rupees. Now imagine Government of India will provide certain amount of subsidies to me. What is a subsidy? I'll write it, have a look at this. Subsidy is nothing but it is the assistance provided by the government. Now don't start running behind the term subsidy, we will discuss it separately. In fact, there's a chapter on subsidy, we'll discuss it. Assistance provided by the government. I'll give a very simple example. Imagine you're a manufacturer, you're producing this bottle. Government says, I will give you a subsidy of, let's say, 5 rupees. I will give you a subsidy of 5 rupees. That is, follow this next point carefully. If you manufacture this bottle, government will give you a subsidy of 5 rupees. Now, simple question to you people, think of it and answer. If you receive subsidy of 5 rupees, what do you think will happen to the factor cost? Do you think factor cost will go up or do you think you will have to reduce the factor cost? Just think of it. I'll repeat it again. When you have produced this particular good, the cost is how much? 100. Cost is simple, 100. And government will give you 5 rupees for it. Right? Will you be willing to sell it in the market at 100 rupees or less than 100 rupees? It will reduce the price. It will reduce the price. Right? So can I write it as -5? Right? That is, again, I'll write an equation here. I will write an equation here is equal to the market price. Subsidies, can I write -5? Factor cost is 100. Indirect taxes. Let's continue. This particular bottle, 100 rupees. Government will say, pay a tax of 10 rupee. Pay simply a tax of 10 rupee because you are selling in the market. Now, can I simply say, if government will impose the tax, it will increase the price of the product in the market. Let me know. If the government has imposed the tax, it will increase the price of the product in the market. Is the equation okay with you people? Just think of it and answer to me. Is the equation okay to you people? That is factor cost plus taxes minus subsidies. What you get is a market price of 105 rupees. Any doubts here? Does anybody have a doubt, sir? Why should I deduct the subsidies? Because if you get subsidies, automatically the price will come down. Right? And on the other hand, if government will impose a tax, then the market price would be higher than what is basically the cost price or the factor cost. Is market price always more than the cost price? You tell me. Just think of it and you tell me. My dear, you have produced a good at 100 rupees. Will you sell it in the market at below 100 rupees? Just think of it. Right, sir, can that happen? Right, then in that context, government should give you large amount of subsidies. Government should give you very huge amount of subsidies and government will not have so much amount of money. Don't worry, you'll understand one by one all these concepts. So understand the logic here. Earlier we used to calculate GDP through factor cost. Now we have shifted to calculate GDP through market prices. This is one more very important change. Sir, why did we change? Right? That is the question. Why did we change? Simple. This new methodology of calculating GDP we introduced from 2014 and 2015. I hope you understand this. This new methodology, that is getting the data through the MCA 21, calculating GDP, right, through market prices, etc. We started from 2014 and 2015. The reason that we started was very simple. Until that point of time, India was one of the few countries which did not adopt a methodology which was recommended by United Nations. This methodology of calculation using market prices, right, using the value addition, etc., etc., India was one of the countries in the global market which did not adopt it. We used to use old methodology. Whereas in 1990s, the United Nations introduced a new system which has been adopted by majority of the countries, especially developed markets in the world. So simple question to you people. An international agency will come out with a methodology of calculation of GDP. Every other developed country has already adopted it. Should India adopt it or continue with its old methodology? I hope you already know the answer to that. India should also adopt the latest methodology or the new methodology which is used by other countries. And that is the precise reason from 14 and 15 we have shifted to this new methodology of calculation of GDP. Done? Right, so first very important change, base year has been changed. Second one, we have shifted to new methodology to calculate the production or get the data of production. We have introduced a system called as MCA 21 database. Now you'll ask me, sir, before that what was there? Before MCA 21, there was a system called as Annual Survey of Industries, ASI, Annual Survey of Industries. Now we have shifted from ASI to MCA 21. Third very important change, earlier we used to calculate GDP through factor cost or cost price method. Now we have shifted to calculating GDP to market prices method. And one more very important change is we have adopted a methodology called as gross value addition, GVA, gross value addition methodology. Now what is this gross value addition? Right, understand this carefully. Right, concept is slightly tricky, understand this. But before that, factor cost and market price. Whatever I've explained so far, it is there in the slide. Market price is equal to factor cost plus indirect taxes minus subsidies. And whatever I've written in the slide, sir, what is there here? You have not explained it. Market price is the price paid by the consumer when they will purchase the good, whereas the factor cost is the expenditure which is incurred by the manufacturer when they will manufacture the product. So from the manufacturer, when the product will reach the customer, there is a taxation, there is a component of subsidy. We will have to adjust it to get basically the market prices. Okay. Next, concept of gross value addition. I'll explain this. What is the definition of it? I will tell you. But before that, have a look at the picture. Simple picture. 3-step process. First, right, you will mine out, let's say, iron ore. You will mine out iron ore. Then the company will sell it to a manufacturer of steel. Right, step number 1 is the company which has mined out means taken out from the earth the iron ore. They will sell it to a company which will convert that iron ore into steel. Right, now this steel manufacturer will sell this, right, steel to a utensil manufacturer, the one who manufactures, let's say, right, let's say glasses, plates, right, cutlery bowls, etc. They will sell it to utensil manufacturer. Now the utensil manufacturer will take the steel, convert that into, let's say, plates. They will sell it to a buyer. This is step 3. Now have a look at it and tell me, is there any doubt so far? Focus on this picture. Any doubt so far? It's a very simple process. First you will mine out iron ore, right, and you will take it and sell it to a steel manufacturer. Steel manufacturer will take the iron ore, purify it, convert into steel. Now sell the steel to utensil manufacturer, who will convert the steel into different types of cutleries, which will be purchased by you, by me in the market. Now, is it okay if I say that at every step that you are seeing here, there is a certain value addition in the system? I'll come to that, just give me a minute. At every step that you are seeing here, there is value addition. Value addition means what? Let's say very simple number here. I think I've written the data here. Let's say very simple numbers. Miner, right, the one with the company, let's say Vedanta company, which is mining out iron ore. First point, they will mine out iron ore and sell it to another company which will convert that into steel. But when I say value addition, right, what is the meaning of value addition here? by the virtue of mining out iron ore and selling it to another company, they would have added certain value to the system. Meaning what? Whenever somebody will purchase certain input or will have certain input, will sell it in the market at a higher price. The difference between these two prices is called as value addition. Is it okay? I'll repeat it again. What is this concept of value addition? Value addition is always done in a system wherein you purchase a product at one price, or you have a product, you will sell it in the market at a higher price. Remember, higher price. Then the difference between the prices of these is called as value addition. Look at the definition. Value addition is done in a system by producing a unit of raw material or services which are then used as intermediary goods or inputs in the whole production chain. I'll start with the example here. This is basically step 1. This is step 1. Let's say Vedanta company has mined out iron ore and it will sell it to me, right? I'm a steel manufacturer. They will sell it to me at 10 rupees. Right now, follow this carefully, think of it and answer. Right? Have the company used any intermediary goods here? Have they used any intermediary goods? They have not used any intermediary goods. I hope you understand. They have not used any intermediary goods. What they have done is basically taken the ore from the earth and they have given it to me. And I've purchased it at a price of 10 rupee. So if they have basically not spent anything on the raw material, that is very important. They have not spent anything on the raw material, right? They have basically taken it from the earth, given it to me at 10 rupee. So this difference between these two prices, that is 10 rupee, will be value addition at step number 1. Any difficulty here? Let me know. The company Vedanta has taken ore from the earth, raw material, right? They have basically taken the ore. Did they spend any money on the ore? Right? Intermediary good. Did they spend any money on this? Absolutely no. Now imagine they have sold the ore to me at 10 rupee. So for them the cost was 0 rupee. For me the cost was 10 rupee. So how much value addition they have done to the system? They have added a value of 10 rupees. Can I go to the step 2 here? Can I go to the step 2? Again, sir, is the calculation asked in UPSC? No. Calculations are not asked in UPSC. You can read any book, they will simply give you value addition means this, right? You will purchase raw materials, you will sell it in the market at a higher price. The difference between that is called as a value addition. What about labor cost? My dear, don't you think when they decide to sell it in the market at 10 rupees, including everything, cost of labor, profit, capital, etc., everything is decided, only then they will sell it in the market at 10. Okay, next. But there is a mining cost. Again, just this, understand this very carefully. Labor cost, capital cost. Why do you think they are selling it at 10 rupee? Why? If they are not spending any money on raw material, I repeat, if they are not spending any money on raw material, why do you think they are selling it at 10 rupee? My dear, don't you think that 10 rupee includes labor cost, capital cost, plus profit, etc.? Just apply basic knowledge, you will get it. Next, I have purchased this iron ore by paying how much? 10 rupee. Now step 2, follow this carefully. Can I write 10 rupee is the cost of raw material, intermediary good? Is it okay? Step 2, can I write 10 rupee as a cost of intermediary good here? Now, I have taken this ore at 10 rupee. I will convert this ore into, let's say, steel. And I will sell it to somebody else, let's say company C in the market at 30 rupees. I purchased raw material at 10. I sold it at 30 rupees. What is the value addition I have done to the system? The value addition that I have done to the system is 20 rupees. So in the second step, value addition that has happened is 20 rupees. Now the third company, let's say you are the third company, you have purchased the steel at 30 rupees. That is the cost of raw material for you. You will convert that into utensil, let's say a plate, sell it to a buyer in the market at 50 rupees. Can I simply say now, value addition that you have done to the system is 20 rupees. So this is step 3. So step 1, we have a value addition of 10 rupee. Step 2, 20, and same thing in step 3. Any doubt in any of the steps? Any doubt in any of the steps? Let me know. That's the reason I've written even the name of the step, right? Or number the step. Step 1, step 2, step 3. Now, have a look at this. This is one of the sectors in the economy. And this is one of the sector. Can I do the same thing for textile sector? Think of it and answer. Can I do the same thing for textile sector? Again, answer is yes. Can I do the same thing for mobile manufacturing? Or I'll just generalize it, electronic sector. So in simple terms, what I'm trying to convey to you people is, whenever you say gross value addition, whenever you come across the idea of a gross value addition, what we have done is, we have tried to find out how much is the value addition done by every one of these within the Indian economy. Now, some of you will simply say, sir, how will government come to know? How will government come to know how much is the value addition that I have done? My dear, go back to MCA 21. Just go back to MCA 21. I will ask this Vedanta company to report the data. I will ask, company A to report the data. I will ask company B also to report the data. If all the 3 companies which are connected with each other like this, one is a supplier to another, if all of them report the data to me, will I not be able to find out how much is the total value addition done by steel sector? How much is the total value addition done by, let's say, mobile manufacturing? How much is the total value addition done by textile manufacturing, etc., etc., etc. So basic formula for value addition is total consumption minus consumption of intermediary goods. Total consumption. What do you mean by total consumption? Don't be confused. Total consumption, step 1 is 10 rupee, step 2 is 20 rupee, step 3 is another, my mistake. Step 1 is 10 rupee, step 2 is 30 rupee, and step 3 is 50 rupee. And what is the value of intermediary goods? 0 plus 10 plus 30. You can do the calculation. Again, you will get the same number. That is the value addition done is 50 rupees in the system. Value addition done is 50 rupees in the system. Is it okay? Shall I go to the next one? Can I go to the next one? This is how the value addition is calculated. Now we have introduced this system. Again, it was there, but we have integrated this into the calculation. Now many of you are asking me, sir, why should we do this? Very valid question. Let me answer it. Why should we do this? My answer to this is simple. Whenever you calculate GDP, you need to find out only the value of the final goods. You should not be counting value of intermediary goods also in the calculation of GDP. I hope you understand this. You should not be counting the value of intermediary goods. You should be counting only the value of final goods. Sir, why? Why should I not do that? I'll take a very simple example. Take the bottle here. Imagine steel worth 50 rupees is used to manufacture the bottle. And the market price of the bottle is, let's say, 100 rupee. Now, if you say, sir, steel is manufactured, we should count that. The flask is manufactured, sold in the market at 100 rupee, we should count that as well. A simple question to you people. If I count steel once and count flask once, total value of GDP will be how much? 150. But don't you think, right, just look at it. Don't you think when the flask price was decided at 100 rupee, the cost of 50 rupee was included in 100 rupee? Is it okay? That 100 rupee price of the flask includes the cost of the steel, that is 50. Now, if you count steel once, flask one more time, it simply means you are counting it twice. You are counting steel 2 times. It is called as double counting. It is referred to as a double counting. And now have a look at the calculation of GVA. What do you think we are doing in the GVA? Right, have a look at this. Right, what do you think we are doing in the GVA? At every step, we are simply removing the cost of raw materials. We are simply taking away the cost of raw materials so that there is no double counting which is going to happen at every step. Is the logic okay here? Is the logic okay? Sir, is the value added same as profit? No, you can add anything that you have incurred, labor cost, capital, etc., etc. Any doubts? Let me know. Can I go to the next one? Either say yes or no. 90 minus 40, 50. Yes. Basically 10 plus 30 plus 50 will be 90 and raw material cost will be 10 plus 30, 40. 90 minus 40, 50 rupees. That is your value addition. Done? Now, this is the one of the important concepts that we have included. But is it sufficient to understand how GDP is calculated? No. Let me complicate it a bit more. Let me add certain more concepts here. Earlier, I hope remember, just some time ago, we discussed the concept of taxation as well as subsidies. Understand this carefully. Some time ago, and that is around 15 minutes ago, we discussed taxation as well as subsidies. And I hope you remember, taxes will increase the price of the product. Subsidies will decrease the price of the product. Is it okay? There should not be any doubt in your mind regarding this. Taxes will increase the price. Subsidies will decrease the price of the product. Now, let's start. Now, within the taxes, there are two types of taxes. Understand this carefully. Some of you will be confused in this concept. One, Government of India will basically promote manufacturing sector. Imagine you're a producer. You want to set up a manufacturing facility. Now, in order to set up a manufacturing facility, you will purchase land. A simple question to you people, when you purchase land, will you pay taxes to government? Think of it and answer. When you purchase land, will you pay taxes to government? Answer is again yes, you will pay taxes to the government. Right now, this tax that you have paid from the government, is it not because you are purchasing land which will use for manufacturing of a product? Let's say this product. A simple question to you people, I'll take a simple number. Imagine you have paid 100 rupees a tax when you purchased the land. Now answer to my question here, when you purchase a land to manufacture the bottle and you pay taxes of 100 rupee, should you pay the taxes from your pocket or transfer it to consumers when they purchase the product? Just think of it. Right? When you will manufacture a bottle, sell it to a buyer, this 100 rupee tax that you have paid, should you from your pocket pay it, or when you manufacture the bottle, should you transfer that tax tied to the price of the bottle? Answer is you should transfer the tax. Transfer means what? Simple. When I will manufacture the bottle, I want to sell it in the market, I will add the taxes into the market price. Into the market price. Simple. Sir, why? Why should I do that? My dear, right, think of this always. Any kind of taxes that you have paid in the course of manufacturing, in the course of providing services, consumer has to pay for it. You don't pay. Consumer has to pay for it. If you say, no, sir, I will not transfer it to consumer, I will only pay from my pocket, you will incur losses. You will simply incur losses. That is guaranteed. I'll give you an example. I'll simply give an example. Today, let's say you will go to a restaurant, order food. Government imposes a tax on the food restaurant. I hope you understand. GST is imposed on restaurant, not on you. But when you go to a restaurant and purchase the food, don't you think the restaurant will transfer that tax to you? Right? When you basically purchase the food, they will add the tax in the bill and ask you to pay for it. Right? Why? Logic is simple. The government will impose a tax on the hotel. But do you think the food is being eaten by the hotel owner? Do you think the owner itself is preparing the food and eating it? No, you are eating the food. So when you are eating the food, the taxes associated with food should be paid by you. Apply the same logic here. So you have purchased the land, you have paid the taxes, which simply means this tax you will have to transfer it to customers. That is one. Second, let's say now you manufacture the product. Understand this carefully. Now you manufacture the product. Government will simply say, for every product, I will impose one more tax. That is, let's say for every one bottle, I will impose a tax of 5 rupees. Ultimately, this 5 rupees again paid by the customer. But follow this very carefully. This is where you need to understand the concept. For every bottle, again the tax is 5 rupees. Now, can I say that the second one, this is the one I'm talking about. The second one is basically associated with quantity of the product. Quantity of the good. Quantity means per unit. One bottle you will sell, you will collect 5 rupees, give it to government. Second bottle you will sell, collect 5 rupees, give it to government. Third bottle you will sell, you will collect 5 rupees, give it to government. Any doubt with the second one? The second tax is basically dependent on quantity, number of units. Whereas the first tax that I've written here, the first tax is independent of the quantity of the products. It is independent. It doesn't have any connection with the quantity or the number of goods you have manufactured. Any difficulty with this, let me know. This is important. You should be understanding the differences between both of them. The first tax is a tax which you have paid, but it doesn't have any connection with how many goods you are manufacturing. But the second one is a type of a tax that you are again paying, but that is connected with the number of goods or number of units of products that you are selling in the market. Sir, why are you stressing so much? For a very simple reason. Understand this. There are two types of taxes. One is called as a product tax. One is called as a product tax. Second one is called as a production tax. Just my mistake. One is called as a product tax. Just a second, I'll correct it. One is referred to as a product tax. Second one is referred to as a production tax. Right? One is a production and the second one is product. Right? Now, what is the difference here? Whenever you come across the term production tax, right, think of it and right, answer this very carefully. Whenever you come across the term production tax, these taxes are generally imposed on the service providers or the manufacturers, but these taxes are independent of volume of production done by the manufacturers. Correct or wrong? Is it okay? Right? Again, look at it. I'll repeat the definition and please participate. Either give me a thumbs up or say, sir, right, explain it again. Right? It's very simple. Either I'll go forward or I'll repeat it. So production means, again I've given the example, then I've written the term. Production means that is a production tax means these are the types of taxes which are imposed and collected, but these are independent of volume of production that you're doing. Whereas a product tax refers to those taxes which are imposed and collected based on the quantity or the number of units that you're producing and selling. These taxes are independent of quantity. These taxes are dependent on the quantity. Product tax, product subsidies. Right? Why you will come to know, just give me some time. What is the requirement? You will understand, just give me a couple of minutes. Second one is again subsidy. Let me start with the example of subsidies here. Imagine you're setting up a manufacturing plant. Government says, good, you're setting up a manufacturing plant. Now what I will do is, I want you to create employment. I want you to produce a certain number of goods, etc. So what I will do is, I will give you certain amount of subsidy to set up a manufacturing plant. To set up a manufacturing plant. That is first one. Second, you have set up a manufacturing plant. Now you are producing this bottle. For every bottle that you have produced, I repeat, for every bottle that you have produced, government will give you 2 rupees subsidy. 2 rupee for every bottle that you have produced. Now, is it okay if I say the first subsidy that was given to you to set up a manufacturing facility is a production subsidy, and the second subsidy that was given to you for every bottle 2 rupee, it is nothing but product subsidy? Any difficulty in understanding this? Let me know. Again, the logic is very simple here. Production means it is independent of volume of production. How many units you have produced? It is not connected to that. Product means what is the number of units you have produced? It is connected to that. Right? So product subsidy, this is an example. For every bottle, 2 rupee. Right? To set up a manufacturing facility, they have given certain amount of subsidy to you. That is production subsidy. So this is how, right? Why this kind of a classification you will understand in some time, don't worry. This is how the latest methodology to calculate GDP divides the taxes into 2 types, divides the subsidies into 2 types. But for simplicity, what you need to remember is this. Whenever taxes or subsidies are connected to units of production, number of units, these are called as product taxes, product subsidies. And when the taxes or subsidies are independent of number of units produced, these are called as production taxes, production subsidies. Done? Right? So this is the classification. Right? And I've given the explanation here. Whatever I've done so far, I've given in the form of statements here. Please go through this. Nothing is different. Same thing that I've discussed, I've given in the statement. Examples are simple. Generally, you will find stamp duties. For example, you purchase land, you will have to pay stamp duties to the state government. Because you are involved in certain profession, you will have to pay professional taxes to the government. These are the examples of production taxes. Product taxes, GST. Best example of a product tax is GST. What about the production subsidies? For many of these sectors, whenever you are setting up a manufacturing facility, government provides a lot of subsidies. In infrastructure, it is there. In agriculture sector, it is there. Right? In the case of product subsidies, many of the sectors, for example, under PLI, that's the reason I generally don't technical names here. PLI, part of the PLI, Government of India will provide it as a part of the subsidy, which is connected to the number of units. So there are multiple types like this. Don't worry, this basic concept is more than sufficient. Now, why should you understand all of it? What is the need? Why should you simply understand the classification of taxes into this, subsidies into this? For a very simple reason, there is a concept called as basic price. There is this idea of a basic price. What is this basic price? It can be defined in 2 ways. I'll give you explanation for both. Follow it carefully. It is the amount receivable by the producer from the purchaser for a unit of good or a service that is produced as output minus any tax payable plus any subsidy receivable. This is one definition. Second one, it is GDP at market prices minus taxes and subsidies on products. And there are different ways to look at it. Don't worry, I'll give you a very simple example. Let's start. Don't worry about technical definition, understand this. Imagine you're a manufacturer. You want to manufacture this bottle. First, you will purchase land. Will you pay tax on it? Answer is yes. Second, you are setting up a manufacturing facility. Imagine you will get certain amount of subsidy. Now question to you. You will purchase a land, you will pay taxes. you're about to set up a manufacturing facility, you will receive subsidies. The tax as well as the subsidy, answer to the question now, is it production or product? I hope you understand what I'm referring to. You will purchase a land, you will set up a manufacturing facility, you will pay taxes when you purchase land, and you will receive certain subsidy when you are setting up a manufacturing facility. Is it production or product? Production. It is a production. Done? That should be very clear to you. Sir, why should I count it? You will have to account for both production taxes as well as production subsidies. Because until now, follow this carefully. Until now, what was the formula? First, I will start with factor cost. Then I will add taxes here, indirect taxes, of course, GST. Then I will account for subsidies. Then I'll simply account for subsidies, which would take me to market prices. But please understand this. What about the stamp duties? Just look at this question here. What about stamp duties? Where did you account for stamp duties here? Don't you think as a manufacturer, when you purchase a land and you have paid stamp duties, you should count that also before arriving at market price? What about production subsidies? Where is the production subsidy here? You have not accounted for production subsidy also. Don't you think if you receive certain amount of subsidy to set up a manufacturing facility, you should count that as well before arriving at market prices? Is the logic okay here? Is the logic okay? Can I go to the next step here? For this very reason, I hope you understand, for this very reason, what they do is, before reaching the market prices, I will start accounting for stamp duties as well as production subsidies. That is, in simple terms, production taxes, production subsidies will also be counted now. How? As usual, we will add a factor cost, that is rent, wages, interest, and profit. We will include that as a part of factor cost. All of these are included in the factor cost. No, my dear, these are not included. These are not included. Tell me, did I write stamp duties as a part of what? Right? If you say all of them are included in the factor cost, where did you write stamp duties? Go back to yesterday's PPT as well. Check it. You will not see that. You will not see that. That's a fact. And that is the reason we have shifted to this methodology. Right? So first we'll start with factor cost. That is rent, interest, wages, and profit. To this, I will add production taxes and subtract production subsidies. Subtract production subsidies. And once you account for the production taxes as well as production subsidies, what you get is, it is basic prices. It is basic prices. Any difficulty in understanding this? What is a basic price? Technically, this is the definition. Just a second. Technically, this is the definition. It is amount receivable by the producer from the purchaser for a unit of good or a service produced as output minus any tax payable plus any subsidy receivable. This is basically the definition, technical definition given by the government. But how do you derive the basic prices? You start with the factor cost. To the factor cost, you add production taxes and you subtract production subsidies. What you get is basic prices. Why are you not counting the product taxes? My dear, that is the next step. Wait, I have not yet arrived at market price. The product is manufactured. The question is, sir, why are you not counting product taxes? I have manufactured the bottle. Understand this. I have manufactured the bottle. That is basically the price that I've incurred to manufacture the bottle is basic prices now. I will take it to the market. Once I take it to the market, now you will get product subsidies as well as product taxes. That is the next step when we will take it to the market price. Any difficulty in understanding the concept of basic prices? Any difficulty in understanding basic prices? Again, I'll repeat it. In basic prices, You will not count product taxes because you are yet to sell it in the market. You have produced it. Okay. So GST is still not applicable. You take it out, GST will become applicable. Now, what is the idea here? In order to produce this particular bottle, earlier I simply counted factor cost. I simply added factor cost. But what this GDP method says is, apart from the factor cost, you would have paid certain production taxes. Who is going to count it? You would have received a certain production subsidies. Who is going to count it? That is exactly what I've done here. And by adding all of these, that is by accounting for all of this, what you get is basic prices. That is the concept of basic prices. Now, is it a market price? Do you think basic price is a market price? Of course no. It is a basic price. I meant to add product tax. I meant to basically account for product subsidies. Right? So what is the next step then? I need to move from basic prices to market prices. Simple. I need to move from basic prices to market prices. So apart from the basic price, what other things you will have to account for? You will have to account for product taxes as well as product subsidies. You will have to account for what? Product taxes as well as product subsidies. Why? I've manufactured it now. I will bring it to the market. Government will impose a product tax. And I might also get a product subsidy from the government. Now, can I write the next formula like this? Have a look at this. I will write the formula like this. Basic prices plus product taxes. Product taxes minus, right, product subsidies. Minus product subsidies. It will give you the market prices. It will give you market price. This is how the market price is derived. Let me know. Any difficulty in understanding this? Let me know. Some of you might be thinking, sir, why are we doing this? Simple. You have started from the factor cost. At any point of time, you'll have to start from factor cost only. I think that is very much clear to you people. Land, labor, capital, entrepreneurship. You will start from the factor cost. You need to arrive at market price. You need to arrive at market price. But how do I move from the factor cost to market price? I will account for all the taxes, be it product, be it production. I will account for all the subsidies, be it product or be it production. Now have a look at the formula and tell me, have you missed any expenditure that you've incurred? Have you missed any, let's say, subsidy that you have received? Right? Either you will receive subsidy per unit or overall for, right, the manufacturing facility without being connected to the units. You have accounted it. You will pay taxes, right, either for purchasing land, professional taxes, which do not have any connection to, right, the manufacturing, or you have paid taxes connected to the unit of manufacturing. You have accounted for production, products, everything has been accounted for. And that is the reason you will arrive at the final price, that is the market price. This is the price that is paid by the consumer in the market. So this is the latest methodology of calculation. This is how you need to move from factor cost to the market price of the product. Are transfer payments included? Right? Transfer payments is very tricky. Transfer payments are what? First and foremost, Aditi, what are transfer payments? Transfer payments, if these are paid to companies, generally included. Transfer payments done to individuals, these are not included. Others, don't worry, what is a transfer payment? Not today. You please do not be worried. Okay. But sir, product tax is already added in basic prices. My dear, you tell me in the basic price where you have added product taxes. Rajan, please look at the formula. Please look at the formula. Tell me where is the product tax added in the basic prices. I hope you understand product tax is different, production tax is different. If you ask me, sir, what is a production tax and product tax? The whole story is over now. Right? We started with that. Production, product, both are different. I gave you examples for that, etc., etc. Only after that I came to this formula. right? So in the first formula, or let's say I'll write it in step 1, production taxes, production subsidies are considered. In step 2, product taxes and product subsidies are considered. Okay. In market price, the tax part is counted. That will lead to higher GDP. It's not reflect in actual production. Taxes may increase. Of course, yes. Of course, yes. Right. Whenever you calculate GDP based on the market prices, it is inclusive of the taxes. And don't worry, we'll try to rectify it over a period of time. Don't worry, right? And this is common for every country. Now, then don't say, sir, just to increase, right? Some of you will then put an argument. Just to increase the GDP, the government might increase the tax. That will lead to higher GDP. My dear, your fundamental, let's say the thinking itself is wrong in this context. Why? If government will impose a tax, let's say on all the goods and services, higher tax now, so as to expand the GDP, then don't you think that the government is trying to defy the law of demand? If government of India say, let's say, in order to increase GDP number for India, they will impose, let's say, 50% tax on all the goods and services, then don't you think the law of demand will come into picture? Do you think people will purchase more and more goods and services in the market? So just think of that also. Okay. Okay. Done. Where the profit of the manufacturing goes, my dear, what about factor cost? It's like I've started from ABCD, I've reached somewhere around STU, and you are asking about ABCD now, right? What about factor cost? Don't you think the factor cost already includes profits? Okay. Stamp duties, are they included in production taxes? Yes. Stamp duty, what is a stamp duty? If you go and purchase a land, if you purchase a property, the state government will impose a tax on the property value. That is called as a stamp duty. Okay. Sir, we'll get discounts as well. My dear, if you get a discount, what is the price of the product? Just think of it. If you purchase a product in the shop, let's say you'll go to a mall and the actual MRP is 2,000 rupees. Let's say 20% discount is given. What is the selling price? What is the market price of the product now? What do you think will be given in the bill? Do you think the seller will print 2,000 rupees in the bill? Or they will print 1,600 rupees? That is the market price, right? So that is how generally all of this is accounted for. Okay, done. Right, so this is a basic idea. Do not complicate the things. Keep it simple. Keep it simple. I'm already aware of the fact that many of you feel, okay, this itself is difficult. And trust me, the same question was asked by UPSC. In the mains in 2021, same question was asked. Discuss the latest methodology of GDP calculation in India. Straightforward question, easy question, right? Assuming you have basically by-hearted the sequence here. Now, let me give you the formula. Technically, how the formula is provided. First and foremost, just look at this equation and answer. Just look at the equation answer. Should I be calculating the factor cost for all the goods like this, or should I be taking the gross value addition? Is it okay? Should I be calculating factor cost for every good like this, or should I be taking gross value addition? What do you think? So calculate factor cost for every good and get the sum total, you will get GDP. Will that be correct? It will be wrong. If you follow the discussion, this is very easy to answer. Sir, why? Why should we not take a factor cost for every good? Why should we take GVA here? Argument is, I'll take the same example. If you calculate factor cost for this particular, let's say steel as well as a flask, then you are mistaken. You are basically making a mistake by counting steel 2 times. So rather than writing directly factor cost, can I write it as GVA? Factor cost GVA. Is it okay? We should not be counting it directly. We should be calculating the gross value addition at every step. Now, is it okay? Can I go to the next step now? Is it okay? Why I'm writing GVA at every point? You should not simply write factor cost. If you write factor cost, simply means you're not counting value addition, you're double counting it. Right? That is wrong. Intermediary good has to be removed. So I will write GVA. So have a look at this. I will start with the first point, that is the factor cost. But not just a factor cost, I will have to ensure that there is no double counting. GVA at factor cost plus production taxes minus production subsidies. Simple, same formula. GVA at factor cost plus production taxes minus production subsidies. What you get is a GVA at basic prices. Now you will take a GVA at basic prices. You will add a product taxes, subtract product subsidies. What you get is GDP at market prices. Simple. What you get is GDP at market price. And this is nothing but the GDP data you come across in the newspaper. Is it okay? This is nothing but the GDP data that you come across in the newspaper. For example, they'll say GDP for India is $3.3 trillion. GDP for India is let's say 26 lakh crore rupees, 49,000, whatever it is. So whatever data you come across in the newspaper regarding GDP, it is this GDP, that is a GDP at market prices. And please understand this. They will not write at market prices everywhere. I hope you understand. If you don't trust me, take out the newspapers for the last 4 to 5 days. Look at GDP number given by the government. They will not write GDP at market prices everywhere. Wherever they write GDP by default, it is a GDP at market prices. So these are the two formulas, right? This is a step 1 and this is a step 2. And this is how you derive the GDP at market prices as per the latest methodology which we have introduced from 2014 and 2015. And which authority, which is this authority which is involved in production of all of this data, right? Which is this authority which calculates all of this data and gives it to you? It is National Statistical Office, NSO. National Statistical Office. NSO is the authority which will provide all of this data to you. On quarterly basis, they will publish the data. Okay? Where does the GVA come? My dear, you are looking at the formula in a reverse way. Start. Can I write it like this? After all of this story is over, you are asking me where does the GVA come? The same formula. Have a look at this. The same formula, including this, by the way. I'll use a different color so that you understand. The same formula, I'm writing it reverse. Any difficulty in understanding? The same formula. That is, I've started from basic prices. Basic price is equal to GVA at factor cost plus production taxes minus production subsidies. Same formula I've written in this way, and you're asking me how do you arrive at GVA at basic prices, right? It's basically the formula that you have derived some time ago, right? So this is how GDP calculation is done. Any doubts here? Can I go to the next one? Because this is a GDP methodology and more than sufficient for UPSC. Okay, I'll put everything in a nutshell. Follow the discussion here. Whatever I've discussed so far, I'll put it in a nutshell. First, what is GDP? Market prices of all the goods and services, again final goods and services which are produced in a country. We calculate GDP through production method, expenditure method and income method. Now whether you use 1, 2 or 3, value should be one and same. Then I've taken the production method. I've basically told you how the calculation is done, except one point. Like I've told, I'll discuss it maybe today or next week when I cover inflation. That is, first point, the calculation, for the calculation base year has been changed. Earlier it was 0405, now it is 11 and 12. Second, earlier we used to calculate GDP through cost price, factor cost. Now we have shifted to market prices. Third point, for the collection of production data, we have introduced a new system, MCA 21, Ministry of Corporate Affairs 21. And the fourth point, there is a calculation of value addition at every sector or at the sector level, which is called as a gross value addition. And the fifth one is the concept of basic prices. That is, the price that the seller must receive after accounting for product taxes as well as product subsidies from the market price. I've shown you how the calculation is done. If you ask me, if you want to write for UPSC, don't worry about all those calculation. Remember these last two formulas. More than sufficient. Last two formulas, more than sufficient. Right? Now understand the logic. At every step, right, there is a calculation of gross value addition so that there is no double counting. And that is a precise reason we will calculate GVA at factor cost. Then to this we will add production taxes, subtract production subsidies. And right, once you account for it, what you get is GVA at basic prices. And from the GVA at basic prices, you will add product taxes, subtract product subsidies. What you get is GDP at market prices. Right? So this GDP at market prices is actually the GDP now. Okay? Done? So this is the latest GDP methodology. Now you can discuss hours and hours regarding the same concept of GDP calculation. Don't waste your time. This is what is required for GS paper. Stick to this. Right? People have done PhDs on concept of GDP. Trust me when I say this. People have done the PhD on GDP concept. You don't worry. Okay. So in explanation, do we need to write definitions of all? It all depends on the number of words which have been given to you. If they ask you to write in 250 words, you can extrapolate and write. Easily you can fit in 250 words. But if they ask you to write in 150 words, as it was done by the UPSC earlier, you will have to skip some of these explanations. Stick to the points, because if you write all of it, you will definitely hit 150 number words. Okay. Next, what are some of the important factors here? Right? What are some of the things that are excluded in the calculation of GDP? One, the services which are provided by the housewives, it is not counted in the calculation of GDP. Why? Simple. Whenever you talk about houses, either I provide whether I provide the services in the house or my spouse provides the services, we are not paid money for it. Is the logic okay? We are not paid money for it. And because we are not paid any money for it, accounting, right, this will be very, very difficult. Is the logic okay here? Right? Accounting for this money will be very, very difficult. For example, imagine, right, you will go to the kitchen after the break, or during the break you will go to kitchen. Your mother, I'm pretty sure they will be ready with a plate of food for you. They will simply say, "Mera beta economics pad raha hai," right? My son or daughter is learning economics. It is very difficult. Even I did not understand. So they will give you a plate of, let's say, poha, upma, whatever it is. Will you pay money for that particular plate of food? Right? Try it once, then see what will happen. Right? Then see how Indian parents will react. Right? So argument is simple. Whatever services are provided within the house, we are not paid money for it. And because there is no money paid, how can you count it in the calculation of GDP? That is first point. Second one is black money. What is the idea for black money? Simple. The money which is unaccounted, I repeat, the money which is unaccounted is called as a black money. Now, what do you mean by unaccounted? Let me show it to you. This is 100 rupee that I have. Same 100 rupee like yesterday. Now, can anybody say whether this is a money which is white or black? Anybody with certainty? Can anybody with certainty say whether it is white money or black money? White money means what? The money which is accounted again means government knows the source of income and I've paid the right amount of taxes to the government. Right? That is basically, right, the concept of accounted money. Okay, sir, it is 500 rupee note. My dear, it is 100 rupee note. I wish it was 500. And if you can convert it to 500 rupee note, please do that. I have many more other 100 rupee note. I'll hold it one after the other. So understand the logic here. This, for certainty, you cannot say whether this is white or black. There is absolutely no way through which you can say whether this is white or black. There is no guarantee. Right? Why? You don't know whether the government knows what is the source of this income or not. Government doesn't know it. Some of you will say, sir, but government can come to know. Reason is very simple. when let's say most of the economy in India or large part of the economy in India conducts transactions on cash. For example, imagine I'm working for you. One way to pay wages to me is transfer the wages into my bank account. Now government knows how much is my income. Clear? Another way is you will simply at the end of the day pay 100 rupees to me. Now tell me, does government know how much is the income that I've earned? Simple. Does government know how much income I've earned? Answer is simply no. Government will not be able to come to know that. So that is the reason I'm saying whenever the cash is there in the system, it is very difficult for the government to account whether it is white money or black money. And if you are not able to find out how much is the factor incomes earned by the people, right, don't you think black money will cause a problem, or black money will create an issue of counting, and you will not be able to find out how much is the total income, hence you will not be able to find out how much is the total GDP. Any problem with the black money here? Black money is that money which is unaccounted. Simple. Sir, what is the definition of black money? It is unaccounted money on which the tax is not paid and the government doesn't know source of it. Very simple the answer to that. So as per the logic, right, given by the government, because I don't know how much income you are earning, I will not be able to count how much is the contribution of your income in terms of GDP. Third, transfer payments. Now come to the question here. Sir, what is a transfer payment? Earlier I said, don't worry, we'll discuss it later. Have a look at it. Transfer payments generally means one-sided transfer of money. One-sided transfer of money. Now understand this carefully. Government of India will provide a lot of transfer payments to population in India. Is it okay? Right, for example, imagine there is a person, he doesn't have a job. Government might simply provide a transfer payment, assistance to the person. Right, certain people, let's say widows, Government of India will provide assistance to those people. Old age population is there. Government will provide transfer payment to that population as well. So transfer payment, whenever of these nature are there, which are not connected to the production, I have to understand, which are not connected to the production, these transfer payments are not counted as a part of GDP. Okay. Next, old goods which are resold. What do you mean by this? I'll take a very simple example. Imagine I've purchased the bottle last year. Simple. I have purchased the bottle last year. So when I've purchased this bottle last year, is it already part of last year's GDP? Right? Answer is yes, by the way. Is it a part of last year's GDP? Answer is yes. Now I will take the same bottle, resell it to you. I hope you understand. I will resell it to you. Again, don't say, sir, who will purchase the bottle? That is not the question here. I will resell it to you. So when I resell the bottle, is it a new product in the market? No, it is not a product which is manufactured new. It is already accounted for in the last year's GDP. So whenever the products are resold in the market, for example, cars, for example, let's say laptops, mobile phones, or real estate, etc. Whenever these kind of products are resold in the market, these are not new products. These are not manufactured new. These were already accounted in the GDP, hence will not be counted again. Is it okay? Hence will not be counted again. So these are some of the factors which will be excluded, right, whenever the GDP calculation is done. Is the issue okay? Can I go to the next slide now? Can I go to the next slide? Sir, are these taken into consideration of personal income? Right? Generally, no. Government transfers, right? Again, it is provided to the very, very destitute people, or let's say old age people, very poor people, etc. Whenever you talk into, let's say, or you talk about personal incomes or national incomes, generally we don't count it. Okay. Let me go to the next one. So that is the end of GDP. The calculation of GDP is done and dusted. Any doubts in the calculation of GDP? Let me know. Any doubts in the calculation of GDP? Otherwise, I'll go to the next one. Black money is also called as parallel money. Black money is also called as parallel money. Yes, black money is also referred to as a parallel economy. Okay. If unit of product sold increases, then production tax per unit will decrease. Then how firm assume that the production tax per unit imposed? If unit of product sold increases, then the production tax per unit decreases. How? How? Right, how production tax per unit, okay, production tax per unit will decrease. Then how firm assume that what production tax per unit to impose? My dear, there are a lot of accounting practice for that. My argument is simple. Why do you always want to become a chartered accountant? We can spend hours and hours. Why? What is the requirement? Right, do you want to become a chartered accountant in this? No, that's the reason. Just stick to more than the basics for UPSC. Right, sir, I want to learn anything. Then please understand, you will not be able to complete economy. That I'll give you guarantee. You will not be able to complete economy for that matter. Black money is important for UPSC. Of course, yes. Black money anyways is important. Define black money. The money that is unaccounted, the tax on which is not paid to the government. If production taxes are applied, then why production subsidies are given? My dear, please understand, the whole logic is, it's not that always, in every case, production taxes as well as production subsidies are there. Not always. But what if in certain situations, production taxes are given, production taxes are imposed, but only for few companies, production subsidies are also provided. I hope you understand. Right? So there are instances where basically you will have both of them. Then you cannot have a different formula every time. So that is the reason generalized formula is used. Okay, let's start. Next concept, gross national product. Gross national product. Sir, are the remittances considered? My dear, you tell me, remittances, let's say an individual who is working outside India, don't you think that person is producing outside India? Their services are provided outside India. Whatever remittances they send to India, should it be counted? Just think of it, no? Just think of it, right? So when they are producing it outside India, when they are contributing the factor services outside India, should it be counted as a part of India's GDP? So GDP means anything that is produced in India, right? Anything. When they are earning outside India, how can you count it as part of India's GDP? It doesn't make any sense. Think of it. Okay, next. Gross national product, GNP. Okay, GNP. Now, what is the idea here? Gross national product. Understand the logic here. Until now, we discussed GDP. In GDP, whatever goods and services are produced in India will be counted as part of India's GDP. After that, we have a gross national product. Gross national product simply means whatever is the market price of all the goods. Again, when I say all the goods here, all the final goods and services which are produced by citizens of a country within a financial year. Now, I'll be very technical in this sense here. Rather than using the term citizens, they will also use the term nationals of a country. Different books are using different terminologies. Do not be worried about it. Okay, all the final goods and services which are produced by nationals of a country, right, whether they are living in the same country or in a different country, will be accounted in the calculation of gross national product. Now, I hope you understand the difference between GDP and GNP. GDP, I'll take a simple example here. I think I've given it. Okay, I'll come to this, don't worry. Imagine this is Indian economy. I know this doesn't look like map of India. Please don't file a sedition case against me. Okay. So imagine this is a map of India. And there are three people, or let's say there are three companies in India, A, B, and C. Now, out of three companies, let's say two are Indian companies and the third one is a foreign company. Now, is it okay if I say, because all the three companies are producing goods and services in India, total market value of final goods and services produced by all the three companies will be part of India's GDP. Any difficulty in understanding this? Let me know. These three are creating the final goods and services in India. So whatever is the final goods and services, the market price of that will be counted as a part of India's GDP. But look at the next point carefully here. Out of three companies, I said one of the company is a foreign company. It is a foreign company. Now, if you talk about gross national product, okay, if you talk about gross national product, should you be counting the production done by a foreign company in India? Should you be counting the production done by company C in the gross national product? Answer is no. If you're talking about gross national product, you should not be counting, right, the profits which are generated by the company C, because it is not an Indian company, it is a foreign company. Point number one. Second point, imagine there is one more company, company D, right? Or let's say D company, again, don't enter there, right? Let's say company D. This company D is an Indian company, but it is located in USA. I'll repeat it. It is an Indian company, but it is located in the USA. So first point, whatever are the profits of company D, should it be counted as part of India's GDP? Think of it. Whatever is the profit generated by company D, should it be counted as part of India's GDP? Participate. Only two people have answered. Again, I'll repeat. Understand the context here. GDP. I'm talking about GDP. GDP means whatever are the goods and services produced in India. Now, some of you are saying yes, you are wrong. Those who are saying yes, you are wrong. What is the context here? I'm talking about GDP of India. I'm talking about GDP of India. And I said company D is not producing in India. It is an Indian company, but their production is located in USA. They are generating profits in USA. So if the production of company D is done in USA, how can you count it as a part of India's GDP? Right? Should you be counting it as a part of India's GDP? No, you should not be counting it. But can I count it as a part of India's GNP? Can I count it as a part of India's GNP? Answer is yes. Why? It is an Indian company. Now some of you will ask, sir, how is that possible? How can an Indian company be located in USA? My dear, a company such as Tata Motors, don't you think they have a company in Britain? Just look at the examples. Just think of it also. A company such as Tata Motors, don't you think it has purchased a company in UK, Britain? So it is a company owned by an Indian company, but the production of goods and services they are doing in Britain. So the profits of that company will not be counted when you talk about India's GDP. But since it is an Indian company, the profits of that company will be counted when you talk about India's GNP. So argument is simple. GDP is a territorial concept. GDP is a territorial concept and GNP is a nationality concept. That is, Indian nationals, whether they are living in India or outside India, doesn't matter. We will count their profits. We will count the incomes generated by them. We will count the interest earned by them, right? Whether they are living in India or outside India. But when I say GDP, whether it is a foreign company, whether it is an Indian company, Indian citizen, foreign citizen, as long as it is produced in India, we will count it as a part of India's GDP. Now, just to make it much more clear, have a look at the table. Right? Just to make it much more clear, have a look at the table. Whenever a company, that is Indian company, is working in India, whenever an Indian company is working in India, right? The profits of the company will be counted as part of India's GDP as well as India's GNP. Whenever Indian company is working abroad, right, because it is creating profits outside India, it will not be counted as India's GDP, but because it is an Indian company, it will be counted as India's GNP. Indian citizen who is working abroad, underline the term abroad. So the citizen is Indian, right? The citizen is from India, but they are generating income outside India, not GDP, part of GDP, but part of GNP. Foreign citizen who is working in India and earning money, part of GDP, but not part of a GNP because it is a foreign citizen. Foreign company working in India, because production profits are generated in India, yes, part of GDP, it is not counted as part of GNP. I'll number them 1, 2, 3, 4 and 5. Any doubts in any of the 5? Let me know. Any doubts in any of the 5 here, right? Sir, in GNP, how factor cost can count? My dear, the logic is same again. Again, I don't know. Don't worry about all of this. Just trust me. If you don't trust me, I do understand. Sir, why should I trust you? I don't trust you. Look at the question paper. Formula is same. GNP, that is GNP at factor cost only they will calculate. Then they will move to the market prices. Same formula is used for all of them. Okay. Right, so this is the basic difference between GDP and GNP. But how do I calculate GNP? How do I calculate GNP? You already have GDP. You already have a concept of GDP. You adjust the GDP with a component which is referred to as net factor income from abroad. Right, you just adjust it for net factor income from abroad. Now question arises, sir, what is this net factor income from abroad? Let me start with a very simple example. All of you remember the concept of factor incomes? What are the factor incomes? I'll start with an example here. What are the factor incomes? Rent, interest, profit, right? Basically rent, interest, profit, and let's say wages. These are the factor incomes. Any disagreement here? These are the 4 factor incomes. Now simple question to you people. I'll take example of a wage here. I'll take an example of wage. Imagine you are an Indian citizen. You will go to America for 3 months. You will be paid for the services that you have provided in America. I'll take a simple number. Let's say 20,000 rupees. Right? Imagine you have received the amount of wages of how much? 20,000 rupees. Second, in the same way, a foreign citizen has come to India. The foreign citizen has worked, let's say, for a period of 3 months. And that foreign citizen has earned wages of 10,000 rupees. Now have a look at this. Because this is a foreign citizen, should I be counting it as a part of India's GNP? Right? Just think of it. Because this is a foreign citizen, should I be counting it as a part of India's GNP? No, I should not be counting. Because you are an Indian citizen, should I be counting this as a part of India's GNP? Answer is yes. But understand the logic here. I've already calculated GDP. GDP data is there with you. Don't you think this income generated by the foreign citizen in India is already there in the GDP? Right? Let me know if you are finding it difficult now only. A foreign citizen has earned an income of 10,000 rupees in India. Don't you think because the income is generated in India, that 10,000 is already a part of India's GDP? Now, if I want to move from GDP to, let's say, GNP, if I want to move from GDP and derive GNP, what should I do? I will have to deduct 10,000 rupees because this is an income generated by a foreign citizen. But by simply deducting this 1,000 rupees, will I get GNP? Just think of it. By simply removing the 10,000 rupees, subtracting the 10,000, will I get GNP? Answer is no. Why? There is one more component, 20,000 rupees. An Indian citizen has stayed outside India, generated income of 20,000 rupees. Who will count that? So what I will do? I will add 20,000 rupees. Now can I get GNP? Answer is yes. Again, I've taken only one factor income here. I've taken only one factor income here. Minus 10,000 because this is a factor income generated by a foreign national in India. Plus 20,000 because, right, basically is the income generated by an Indian citizen outside India. So because I need to calculate anything that is earned by Indian citizens, whether they are in India or outside India, anyways, the earnings in India are a part of GDP. I will add 20 more thousand rupees. Now minus 10,000 plus 20,000, can I call this as one of the net factor incomes? Net means what? I'm adjusting, simple. Plus, right, whatever is supposed to be counted, whatever is supposed to be deducted, I'm accounting for this net factor income. Any doubt in this? Let me know. Any doubt in this? Sir, why are you subtracting 10,000? Simple. Foreign citizen, subtract. Sir, why are you adding 20,000? Indian citizen is earning outside, add. This is what I've done for wages. Can I do the same thing for profit also? Is it okay? Can I do the same thing for profit also? That is, let's say a Hyundai. Hyundai is a foreign company, by the way. Hyundai is a foreign company, has generated profits in India, and that is already part of India's GDP. But should I be counting profits of Hyundai as a part of GNP? Answer is no. So subtract the profits of Hyundai. In the same way, Infosys has generated profits in USA. Tata Motors has earned profits in USA. Add that. That is how you again get net factor income under the component of profit. What about rent? Rent in the sense, imagine you have supplied certain raw materials, etc. Right? Or you own certain land in the foreign market. You have given certain, let's say, real estate on rental basis in the foreign market. Add it. Right? In the same way, again, I'll repeat it, understand this. Right? In the same way, what we do is, I will calculate what is the net factor income for wages, what is the net factor income for profit, interest, as well as rent. That component is basically called as NFIA, net factor income from abroad. Okay, any difficulty, let me know. Again, please follow the discussion here. Please follow the discussion. Concept is simple. Foreign companies are working in India. They are earning profit. You should not be counting this in the GNP. Right? Any difficulty in understanding point one? Let me see. Right? Because three of you are saying, sir, very difficult. My dear, it's not difficult. You are not listening to me very carefully. First, understand the difference between GDP and GNP. GDP is calculated. You already have GDP. But in the calculation of GDP, you have counted profits earned by foreign companies in India, income generated by foreign citizens in India. But what is GNP? GNP talks about nationals, Indian companies, Indian nationals. So in GDP, you have foreign company profit. Should you have that in the GNP as well? Should you count Hyundai company profits when you calculate GNP? Answer is no. Point number one. So what I will do? From the GDP, I will withdraw, subtract. I hope you understand the terminologies. I will subtract the profits earned by foreign companies which are there in India. But that will not give me the total income generated by Indian companies, because there are certain Indian companies which have earned profit outside India, such as USA, such as UK, Example, Infosys, Tata company. So whatever profits are generated by Tata company in USA, in the GDP it is not calculated. So what I'll do, I will add that profit. That is basically the component of net factor income. How much profit Indian companies have earned outside India, how much profit foreign companies have earned within India. The gap between, the difference between both of them is a net factor income. In the same way, foreign citizens have earned in India, they've earned income. Should I be counting that in the GNP? No. Indian citizens have earned, right? Indian citizens have earned outside India. It is not counted in the GDP, but should be counted in the GNP. So what I'll do, how much is the earnings of foreign citizens in India? I will subtract it from GDP. The earnings of Indian citizens outside India, I will add to the GDP. I'll get GNP. Right? So the same thing I will do for, let's say, rent. The same thing I will do for profits. Same thing I'll do for capital. So because these are net factor incomes, and please revise, you find it difficult because you don't remember what is a factor income. Yesterday's discussion you've already forgotten. So whatever are the four factor incomes, I will count it in the same way. Foreigners generating incomes in India, Indians generating incomes outside India. The difference between that is called as net factor income from abroad. Right? So whatever I've told you just now, I've given in the table. Have a look at this. Income earned by Indian citizens living outside India. Income earned, that is a profit earned by the entrepreneurs, as well as the land or the property that is given on rent outside India. Net retained earnings, that is Indian companies which are earning profits outside India. Right? So basically account for inflow of the profit as well as outflow of the profit. That is net, net, net. Okay? So this is how GDP will be utilized, right, to calculate gross national product. So one, we have calculated GDP. Using GDP, we have calculated GNP, gross national product. Now again, before I go forward, sir, will the GDP be higher or GNP be higher? It all depends from one country to another country. It all depends. Generally, in the context of India, GDP is higher than GNP. But again, please understand that can change over a period of time. But please understand this, it all depends on the factor incomes, right? How many Indian companies are there outside India? How many foreign companies are there in India, etc., etc., etc. Okay. Next one, net domestic product. Net domestic product. So GDP is over, GNP is over. Third one is NDP, net domestic product. Now before I go forward, there are two terminologies here, gross and net. Understand this carefully. There are two terminologies, gross and net. What do you mean by the gross? Gross generally stands for total. Gross means total. Net means from the total, whenever certain amount of, right, let's say deductions are done. Whenever certain amount is supposed to be deducted from the total, you will get net. I'll give an example. Imagine you join a company and the company says annually your salary will be 12 lakh rupees. Okay, simple example. You will join a company and the company says annually your salary is 12 lakh rupees. You'll become very happy. Why? You will take out your mobile, calculate it like this. 12 lakh divided by 12, and your mobile calculator will look at you and say monthly your salary will be 1 lakh rupees. But please understand this, whatever salary is given to you, it is not the amount of salary that will be credited into your bank account. Why? From 1 lakh rupees, a certain amount of deductions will be made. Certain amount of deductions will be made. So what kind of deductions? Income taxes. Right? Income tax is deducted. Your contribution to EPF will be deducted. Right? Professional taxes will be deducted. And after that, whatever is the salary that you receive is called as net salary. Any difficulty in understanding gross and net? Should you by heart this calculation? Absolutely no. But the concept is simple. Gross means total, right? How much is the total? But net means from the total certain deductions are made and you will get the net. That is the basic difference between gross and net. Can I go forward here? Can I go to the next one? I'll take up the concept of net domestic product. Now what is this net domestic product? NDP. Okay. It is obtained, that is NDP is obtained by subtracting the value of depreciation of capital assets of the nation from GDP. I'll explain this, right? I'll explain this, don't worry. What is NDP? Net domestic product. It is the market price of all the final goods and services after adjusting for depreciation. I'll explain depreciation, have patience. Right? Any difficulty in the definition, let me know. Right? That definition is technical, but I'm giving a very simple definition. It is the market price of all the final goods and services which are produced in a country after accounting, after adjusting for depreciation. That is called as net domestic product. Any difficulty in the definition? I will explain depreciation, but before that, any difficulty in any other terminology that I've used in the definition, let me know. Now, what is this idea of a depreciation? What is this concept of a depreciation? Simple. Imagine you start a company today, right? Follow this very carefully. Imagine you start a company today, and today you will purchase, let's say, a machine. You'll spend money and you'll purchase a machine. Now, simple question to you people. Don't you think after a certain number of years, you will replace this machine? Let's say 5 years, 10 years, whatever it is. After a certain number of years, you will replace this particular machine. Yes or no? Please participate. Right? Many of you are simply sitting quiet. Many of you have dozed off also. Wake up. Don't snore. I can hear to your snoring now. Wake up. Right? So what I'm trying to say is simply this. You have set up a facility. You will, right, purchase a machine today. Don't you think after a certain number of years, you will replace the machine? Replace means what? You will dispose of, throw away the old machine. You will purchase a new machine. Point number one. Point number two. Think of this and answer. I will give you two examples. Example one, example two. Here is one economy where one machine is there. The machine has become older. A new machine is manufactured this year. This machine is disposed of and a new machine is installed. Is it okay? What? Example one. A machine is there. I will throw away the machine because it is older, right? And I will bring a new machine to replace it. Example two. One machine is already there in the system. In addition to this machine, I will purchase one more machine. So under the example one, how many machines are there? Only one. Under example two, how many machines are there? Two machines. Right? So far so good. Now simple question to you people. Under which of the two examples production in the economy would be higher? Just think of it and answer. It's very easy, by the way. Under which of the two examples you are able to see here, production would be higher? Very straightforward. Sir, example 2. Why? In the example 2, one machine is there. Can I call this as capital? Let me know. Right? It is difficult or what? Can I call this machine as a capital? To the existing capital, I'm adding a certain amount of capital. There is existing capital. I'm adding more capital. In the example 1, there is capital. I'm replacing the capital. In first case, I'm replacing capital. And in the second case, I'm adding capital. And obviously, right, because of more capital under the second example, you can expect a higher production in the second example. Now, that is point number 2. Point number 3. Follow this point. Point number 3. Every year, machines are produced which are counted as part of GDP. Agreed? I'll repeat the point. Every year, whenever we calculate GDP, we also count certain machines which are created, produced in the economy, because these are nothing but the goods. So we will count the machines. But the problem is this, follow this carefully. The problem is that all the machines which are created in 1 year, all the machines either will be used for replacing of the capital or will be used for addition to the capital. Any difficulty, let me know. All the machines which are created in 1 year, they'll be used either for replacing existing capital or adding to the existing capital. For example, sir, what do you mean by this? Imagine 2 machines are produced in India. Simple example, okay? Always try to simplify. Imagine 2 machines are produced. One of the machine will be purchased by company A to replace the machine. Another machine will be purchased by company B to add to the existing capital. Now, simple question to you people. These 2 machines, if they are produced, which would be a better situation? Both the machines used for replacing of the existing capital, or both the machines used for addition of the capital? Which would be better? Which would be better? Example 2 anyways is better. So if you use the 2 machines to add to the existing capital, that will increase the productivity. So far so good. Addition to the capital is always good. Higher the capital, higher the production. Now that is point number 2. Let me go to the next point. This is very, very important. Whenever you spend money, understand this carefully. Whenever you spend money to replace existing capital, that expenditure is calculated or counted as depreciation. Is it okay? I'll write it again or I'll repeat it again. Understand this. Whenever you spend money to replace existing capital, that money that you have spent is called as depreciation. Any difficulty in understanding the term depreciation, let me know. Right? Imagine you are the manufacturer, you have a machine, it has become old, you will spend, let's say, 1 crore rupees, you will purchase a machine, dispose of, replace the existing machine. The money that you have spent, it is called as depreciation. Done? Okay. Now, I know some of you are from accounting background. Right? I know. Right? For example, Anushka. Right? I know you are from accounting background. You're saying, sir, no, you are wrong. Right? It is done like this. From the profit, it is taken side by side. 2 methods are there. Don't worry. Understand the basics. Accounting people, you are good. Don't worry. Right? So have a look at this. Every year, certain machines are created, certain capital gets created. Part of the capital will be used to replace existing machinery. That expenditure that is incurred, it is called as depreciation. Right? Now, understand this carefully. Why? What is the reason? Why are we accounting for depreciation? Argument is simple. Whenever you calculate GDP, right? Whenever you calculate GDP, you have counted all the machines which are produced in this year, because these are sold. All the machines which are produced this year have been sold. Hence, you have counted them as part of GDP. Now have a look at the next point. What if some of these machines, right, have been used to replace existing capital? Right? Don't you think rather than looking at only GDP value, you should have some other value which will give you a better idea of how much machines are used for a replacement of existing capital, how much of the machines will be used to add to the capital. That is, I'm trying to tell you that GDP data will not tell you how much is addition to the capital, how much is, right, basically a replacement to the capital. Is my statement okay with you? Is it okay? I'll repeat it again. Right? I'll repeat it again. GDP data doesn't tell you to the capital whether you have added more capital or to the existing capital, or you have replaced the existing capital. That GDP data will not tell you. Right? Let me take an extreme example and showcase it to you. Right? Imagine this example. Again, I know, sir, very, very extreme case, but just to make it simple. Imagine in the whole Indian economy, there is only one machine in the whole economy. Now, there is one machine which is produced, and this is the only good that is produced in India. I hope you understand. That's the reason I said extreme case. One machine is produced in India, and that is sold. Now, have a look at this. What is the market price of this machine? That will be counted as GDP of India. All of you will agree? What is the market price of this one machine which is produced this year? Because this is the only product which is produced, that will be counted as GDP of India. So you will calculate GDP as, say, let's say it is 1 crore rupees. You'll say that GDP of India is 1 crore rupees. But whether this machine is used or has been purchased to add to the existing capital or to replace existing capital, can the GDP data tell you that? Think of this. Can the GDP data tell you the quality of this capital? Absolutely no. It doesn't have that kind of a nature of information. You will not be able to get it. But what I can do is, I can find out whether this machine has been purchased by the company to replace existing capital or to add to the new capital or to add to the existing capital. Obviously, we would prefer the second one, because if I look at the depreciation component, if the depreciation is very, very high, understand my statement here. If the depreciation component is very, very high, means the machines are very old in Indian economy. I hope you understand this. If the depreciation component is very, very high, means the capital is very, very old. If the capital is very, very old, what do you think will be production then? Don't you think the production would be very much limited? So higher value of depreciation always limits, right, the amount of production that is done in the economy. That is the reason. Have a look at the next point now. Whenever you calculate GDP, there is a component of depreciation. Again, technically, depreciation calculation is different. I know that. You don't have to correct me. Some of you are correcting me. I know that. You are writing UPSC, just stick to the basics here. In case of depreciation, we are spending money to replace existing machinery, replace existing capital. So what will happen is, out of GDP, that is the goods which are produced in India this year, some of the capital will be used to replace existing capital. I'm trying to find out how much is that capital. That is depreciation. Right? So the formula is simple here. Net domestic product is equal to gross domestic product minus depreciation. But what is the importance of this calculation? Why should we even calculate it? Just think of it and answer. Just think of this and answer. What do you think should be the gap between NDP and GDP? Should the gap between NDP and GDP, should it be narrow or wide? I'll repeat it again. Should the difference between NDP and GDP, should it be narrow, small gap, or a very, very wide gap? The gap between NDP and GDP should be very narrow. I hope you understand my meaning here. It should be very, very narrow, right? And what is the meaning of it? If the gap is very narrow, it simply means out of the total capital that is produced this year, only a part of the capital, small fraction of the capital has been used to replace existing capital. Large part of machinery will add to the capital present in the economy. Is the logic okay? Does anybody have any issues related to this? Right? Let me know right now. Because I know books will give you the formula. Books will tell you the formula. They will give you, right, basically what is the calculation, etc., etc. But UPSC will ask you the meaning of it. UPSC will test you there. Right? The testing is basically this. If the gap between GDP and NDP widens, it is considered good for the economy. This is the statement given by UPSC. Then you will keep on thinking, right, what is the meaning of it? Meaning is simple. GDP consists of machineries. Point number one. Let's go point one, point by point. GDP consists of machineries which are produced in this year. If a large part of the machineries are used to replace existing machinery, it means there is a stagnancy in the economy. The capital is very, very old. I hope you understand. Existing capital is very, very old. Don't you think that is bad for the Indian economy? But rather than that, what if I say only a small part of the machinery that is produced, capital that is produced, is used to replace existing machinery? Means what? Most of the machines will add to the capital, not replace the capital. And addition to the capital is much better than replacing the capital. That is the reason we say that it will increase efficiency, or it is an indicator of increasing efficiency in the economy if the gap between GDP and NDP is very, very narrow. Okay, any difficulties here? Can I go to the next one? Right, I'll show you the calculation also, how we calculate, right, basically the NDP using the GDP. Right, let's say there are only two companies in a country. Again, just a hypothetical example, very, very extreme case, I know that, but understand, UPSC will not ask you calculation, concept is important. There are two companies in a country, let's say A and B. A will produce a good, sell it to B, let's say a machine. Company A has produced a machine, has sold this to company B this year. Let's say the value is 1,000 rupees. Company B, right, has produced goods worth 2,000, sold it in the market. It has sold it in the market. Now, if I have to calculate GDP, I'll simply count 1,000 rupees plus 2,000 rupees. Okay, I'll simply count it as 1,000 plus 2,000. So what is the value of GDP? Value of GDP will be 3,000 rupees. But please understand this, part of this GDP, that is 1,000 rupees, is replacing existing capital. Is it okay? I'll repeat it again. Part of this particular GDP, that is 1,000 rupees, is used to replace existing capital. Now, because it is used for replacing existing capital, I'll deduct the 1,000 rupees, what I'll get after deducting depreciation. This is called as net domestic product. NDP, net domestic product. And I hope you understand now, right, the logic behind the calculation of NDP. GDP, GNP, NDP. And the next one, NNP, net national product. Right, any difficulty so far? Some of you are asking for a break, and no issues. Right, any difficulty so far? NDP calculation, can it be given in CSAT? No. In CSAT, they will not test your economics. Don't worry, in CSAT, they will not test your economics. Okay, any issues so far? Let me know. Otherwise, right, let's take a small break before that. What about foreign companies invested and working in India? Will it be subtracted from GDP in calculation of GNP? Foreign companies which are producing, let's say, earning profits in India will be deducted when GNP is calculated. But when GDP is calculated, right, anything that is produced in India will be, right, counted. So let's say government does not know my income, as you mentioned in the black money, but by that money I purchase some goods or services, then the GDP can be easily calculated through expenditure method. That's the reason, again, the logic is simple. There is this argument of conspicuous demand in the market. Black money always fuels demand in the market. And that is the precise reason, like I said, the calculation of GDP, right? For the calculation of GDP, we generally go through, right, the production method as well as expenditure method. But between these two, generally the most credible, between these two, the most credible is the GDP through production method, because we are getting the data directly from the manufacturers itself. Sir, in example you have given in the PPT and formula you've written in the blank PPT, both are basic prices. I did not understand, right? I've given you that argument already. You start with the factor cost, you move to the market prices, but directly you will not go. First, you will take a pit stop, or let's say, right, you will arrive at basic prices, then you will go to market prices. Okay. Example, previous example, once again, I'll repeat it again, understand this. There are two companies in India, right? So company A manufactures a machine, sells it to company B. Company B uses the machine, produces goods and sells into the market 2000 rupees. So first step, the sale of the good is 1000 rupees. Second step, the sale of the good is 2000. So the GDP of the country will be how much? 3000 rupees. But have a look at this carefully, right? If you want to calculate NDP, net domestic product, company A, it has purchased, company B has purchased the machine to replace existing machine. That is depreciation of 1000 rupee is there. So you deduct a depreciation of 1000 rupee out of the GDP number of 3000, you will get net domestic product of 2000 rupees. Okay, this is how basically NDP is calculated. How NSO will count foreign transactions? My dear, there are a lot of surveys, right? A lot of data points through which they will collect all of the data. You don't have to be worried. You are not going to become a statistician. Live it, right? Again and again, you're basically trying to understand everything related to calculation. My argument is you don't have to be worried about all of it. MOSPI, Ministry of Statistics and Program Implementation, already has systems in place. They know which company is paying how much salaries. They know how many remittances are coming into India, how much exports are going from India. Everything they know. You don't have to be worried about it. Higher depreciation value is good or lower? In the context of a depreciation, let's say you were talking about NDP, we would prefer a lower depreciation value, not a high depreciation value, because higher depreciation generally represents stagnation in the production. That is the reason. Okay, done. Let's take a break now. Let's take a break. 5 minutes break, short break. I'll restart at 12:22. I'll restart again at 12:22. Okay, take a short break. Okay, welcome back. Am I audible? Am I audible? Okay, thanks a lot. Let's start. Net national product. Next one is NNP, net national product. Now, what is this idea of a net national product? Simple. Net national product simply refers to the market price of all the final goods and services which are produced by nationals of a country after accounting for depreciation. I hope you understand this. We already have discussed what is a GNP, gross national product. It refers to what? The market prices of all the final goods and services which are produced by nationals or the citizens of a country. Now from this GNP, if I adjust for depreciation, if I account for depreciation, what you get is simply net national product, NNP. Net national product, that is NNP. It refers to all the goods, products and services that are manufactured by the country's citizens irrespective of their location, or in other words, net national product considers that are produced domestically and also from the overseas. But again, please understand, in addition to considering all these final goods and services which are produced within India or outside India, if I adjust for depreciation, simple, accounting for the depreciation from the gross national product will give me the net national product, that is NNP. Any difficulty understanding this? For a very simple reason. One, you already know what is a GDP, you know what is a GNP, you know what is a NDP, fourth one is a NNP. Now one formula to get NNP is NNP, that is equal to GNP minus depreciation. I will give you one more formula. I'll start with GDP. GDP minus, or let's say plus, net factor income from abroad, NFIA. I will get GNP. This is formula 1. And I'll use the same formula, GNP minus depreciation. You will get a net national product. That is the second formula. In simple terms, what I'm trying to say is, can you derive NNP using GDP? Again, the answer is yes. You can get to NNP using gross domestic product itself. Now, there is one question, sir. In that case, why do we always use GDP? Why not we use, let's say, NNP? Why not we use GNP? Why not use NDP, etc.? Why we just stick to the concept of GDP itself? I'll tell you the reason. Here itself, let me explain this. Right, have a look at this. You have, right, let's say one parameter, that is NNP. And in fact, please understand, between GDP and NNP, if you want to talk about strength of the India, if you want to talk about the productivity of nationals of India, if you want to talk about, let's say, strength of the Indian companies, etc., NNP is a better indicator. Is the logic okay? If you want to talk about, again, I'll repeat it. What is the strength of Indian companies? What is, let's say, the strength of earnings of Indian citizens, right? How much is the per capita better and better, etc. It is always better to look at NNP, net national product, compared to GDP. Because in the context of GDP, GDP can be higher. GDP can balloon if foreign citizens are working in India. If foreign companies are generating a lot of profits in India, GDP will balloon. But that doesn't mean that people living in India, that is citizens of India, are earning more income. That doesn't necessarily mean that Indian companies are earning more profits, etc. But if you look at it, NNP will give you all of that information. Does it make sense or not? Let me know if you disagree. Right? NNP is a better indicator anyways compared to the concept of GDP. But now the question naturally that will arrive is, if that is so, why not use NNP? Why not simply use NNP? Why are we stuck with the GDP itself? The answer to that is simple. Have a look at these arguments. The taxation will change from one country to another country. Right? That is point number 1. I'll explain that. Have patience. The taxation will vary from one country to another country. The subsidies that are given will change from one country to another country. The amount of depreciation will also change from one country to another country. So because of all of these reasons, globally accepted indicator, I repeat, because of all of these reasons, globally accepted indicator for productivity, or let's say the market price of goods and services in an economy, is GDP, gross domestic product. Now, if you talk about NNP, there is a better indicator within the NNP. That is, a concept of NNP itself can further be purified when you calculate NNP at factor cost. There is this concept of NNP at factor cost, right? Understand this. NNP at factor cost is a purest form of income. I repeat, NNP at factor cost is the purest form of the income. Why do we refer to this as purest form of the income? Let me explain this. Follow this carefully. I hope you remember the formula that we have used earlier. That is factor cost plus taxes minus subsidies is equal to market prices. All of you remember this formula? Factor cost plus taxes minus subsidies is equal to market prices. Now take subsidies and taxes, transfer it to the other side. What you will get is what? Market prices, minus, I'll just write it again. Market prices minus taxation minus taxes plus subsidies is equal to factor cost. Any difficulty in understanding how we have moved from point 1 to point 2? Let me know. Any difficulty in understanding point 1 to point 2 or formula 1 to formula 2? Let me know. I'm using CSAT concepts now. That is, when you shift from one parameter from the left side of the equation to the right side of the equation, symbol will change. What is minus will become plus. What is plus will become minus. Right? Not even high school. Right? Let's say second or third standard. So market price minus taxes plus subsidies is equal to factor cost. Now tell me, between market prices and factor cost, right, which is a better indicator to find out what is the production done in the economy? I hope you understand my statement. Between the market price and the factor cost, which do you think is a better indicator to find out how much is the actual production done in the market, right, or in an economy? Start participating. Arshia, please have a relook at your right answer. Please have a relook. Others, only 5 people have given me the answer. Sridevi, please have a relook. Akanksha, Anjali, Pankaj, Karan, Isha, Ayesha, Vishwa, please have a relook. I've taken your name not to humiliate you, because I'm pretty sure, right, none of you know each other, nor do I know you. I'm only concerned about you. That is the only reason I'm taking your names. Sayadri, please have a relook at your answer. You are taking market price is a better indicator to find out what is the production done in the economy. Argument is wrong. It is a factor cost. Factor cost is a better indicator. It is a better indicator to find out how much is the production done in the economy. How? Let me prove it. Let's say GDP of one country is 100. GDP of another country is, let me change the number here. GDP of another country is, let's say 110. Okay, GDP of one country is 100. GDP of another country is 110. Now, if I simply ask you, if both of these are GDP at market prices, which country has a better GDP? Obviously, you'll jump to a conclusion, sir, second country, because the value of GDP is higher. But what if I were to say that in the first country, this is the breakup. Factor cost is 90 rupees. That is, the cost price is 90. Then, right, you have taxation of 5 rupees. And then you have, taxation of 15 rupees. And then you have a subsidy of 5 rupees. Then you have a subsidy of 5 rupees. Will it not give you 100 rupees GDP? Answer is yes. Second country, follow this carefully. Second country, the taxation is, let's say not even 25, I'll write it 30. Taxation is 30, subsidy is 5, and the value of goods or services produced is 85. Now, don't you think because of the taxation, you end up having a GDP at market price of second country higher than first country? Is my argument okay with you? Because of the taxation, you will end up having the second GDP as a higher than the first GDP. Point number one. Second point, right? Second point is, if you compare between these two countries, which country do you think has a higher production value? I repeat, if you compare both of these countries, which country do you think has a higher production value? Higher production value, right, will be obtained in the first country. So is it okay if I say, or some of you are saying second country has a higher production value? My dear, production value means here, I'm talking about the factor cost, right? Focus on the factor cost. So argument is simple. You move to market price by accounting for the taxes as well as subsidies. But don't you think from one country to another country, the taxation will keep on changing, right? What might happen is, because of the taxation, your GDP value, market price might balloon, GDP value might also balloon. But is it an indicator of productivity of the economy? Is it a good indicator of finding out what is the production done in the economy? Obviously, answer is no. And that is the reason I said, rather than at market prices, if you calculate factor cost, rather than calculating NNP first and foremost, it is a purified version. Why? When you calculate NNP, you have accounted for depreciation, you have accounted for production done by nationals. Now, what you're saying is, rather than NNP at market prices, it is a NNP at factor cost, which is a better indicator of income generated in the country. That is the reason they say NNP at factor cost is the purest form of the income. Is it okay? NNP at factor cost is the purest form of the income. Right? I hope you understand this. I'll repeat it again. Understand the concept one by one. First and foremost, NNP means what? Market prices of all the final goods and services which are produced by nationals of a country after deducting depreciation, after accounting for depreciation. That's the definition. I said NNP at factor cost is a better indicator, or much better indicator, purest form of the income. Why? When you calculate NNP at market prices or even GDP at market prices, the market prices of the goods can be influenced by taxation. If a country has a higher taxation compared to another country, the market price could be higher, which means the GDP could also be higher. But if I account for the taxation, if I simply remove the taxation, then I'll actually find out how much is the value of the production after accounting for the subsidies as well as, right, the taxation value. And that's the reason I said, if you look at NNP at factor cost, that is a better indicator, because you are removing taxation impact, you are removing the impact of the subsidy also. And hence, NNP at factor cost is called as a purest form of the income. Right? But again, please understand this. Rather than being focused on NNP at factor cost, globally accepted norm is again GDP. We use GDP across the globe. GDP is a very famous terminology, very famous indicator. Most of the countries have adopted GDP, that is gross domestic price, at market prices. Market prices, right, basically to calculate or measure countries. Now, but sir, factor cost will also change from one country to another country. Now, simple question to all of you is this. If you look at the GDP, which includes the taxes, subsidies, NNP at factor cost, which excludes taxes and subsidies, which one is a better indicator? I did not say that NNP at factor cost doesn't have any problem. I never said that. I stated that compared to GDP, NNP at factor cost is a better indicator in order to find out how much is the production done in a particular country. I hope you understand my argument here. Nobody said, or for that matter, I did not say that NNP at factor cost is the best indicator without any flaw. Of course, yes, factor cost from one country to another country will change. But when you compare between GDP on one side, which includes factor cost, taxes, subsidies, and NNP at factor cost, which includes only factor cost, Which one do you think is a better indicator? I hope you understand the argument now. Okay. Sir, here FC is along with production taxes and production subsidies. No, you're simply focused on FC. That's it. You're not talking about basic prices. You're talking about factor cost. Okay. NNP takes in account indirect tax as well. My dear, that is what we are trying to adjust. NNP at market prices will be taking into consideration indirect taxes, but I'll shift it to other side. What I will get is NNP at factor cost, that is NNP at market prices, subtract indirect taxes plus subsidies. Okay, right? So NNP at factor cost is the purest form of the income, a better indicator because it accounts for production done by nationals, right? It will account for depreciation, it will account for indirect taxes, as well as, right, it will basically account for the subsidies in the system. That is the reason NNP at factor cost is referred as a purest form of the income. Right, so we have covered all these indicators: GDP, GNP, NDP, NNP, right, and NNP at factor cost. All these basically, right, have been covered now. What are the limitations or issues? Okay, what are the limitations related to these indicators? First, availability of a data is a problem. Availability of data. Sir, why? What is the meaning of availability of data? Like I've told earlier, many of these service providers are not registered with the government. And if these are not registered, right, with the government, do you think government will be able to collect all the data that is required? Do you think government will get access to every transaction that is happening in the economy? That is a problem. Okay, there is a limitation there. Second one is a time lag. What do you mean by time lag? Simple. The government will collect the data for the month of, let's say, April, May, and June. And I hope you remember, April, May, June is nothing but the first quarter of a financial year. But please understand this. What is the GDP? That is the market price of all the goods and services which are produced in this quarter. You will not know immediately after the end of the quarter. You will not get it. Why? They will have to collect so many data points. They will take time. Generally, after 1.5 months or after 2 months, you will get what was the GDP value for the first quarter. Is the logic okay here? I'll repeat it again. What was the market price of all the goods and services sold for the month of April, May, and June? You will not get the information immediately. You will not get it. You will get it after, let's say, 1 month or 2 months. Sir, what is the problem? If I get the information after 2 months, what is the problem? Problem is simple. Imagine there was a drop in the production in the month of April, May, and June. The market prices has dropped. You want to implement the reforms immediately, or you want to wait for 2 months and implement the reforms? You think of it. I hope you understand this. Right? Would you want the reforms to be implemented much sooner, or after 2 or 3 months from the period is over? When do you want to implement it? Right? Or else, sorry, even then it is very difficult to understand. Would you want to know the data or the performance of the economy very quickly, or you want to wait for 2 months and find out how the economy has performed? What if the economy has not performed well? Don't you think you have basically crossed all those months without realizing there was a problem in the economy? You want to implement reforms, but it is very, very late already. Right? That is the issue with time lag. Time lag means time delay. Simple. Third one, existence of non-monetized consumption. In fact, the NSO data says in certain parts of India, non-monetized means what? I will give you, let's say, right, 1 kg of rice. You will work for 1 day in my field. Simple. Right? I'll give you 1 kg of rice or 2 kgs of rice. You will work in the field, right, for 1 day. Now, basically, when this kind of a transaction will happen, and NSO says it happens in India, You might be living in a city and say, sir, no, I've never seen this happening. Whenever these kind of transactions will happen, simple, think of it and answer, do you know what is the value of the services provided? Do you know, right, how much services have been provided, how much money has been paid, right, etc. That will not be able to find out. So existence of non-monetized consumption will also lead to certain problems, limitations in the calculation of GDP. Presence of black money, parallel economy is nothing but black money. Presence of black money in the system will also create issues in the calculation of GDP. And finally, right, whenever you calculate GDP, there is always an impact on the environment. I'm pretty sure all of you understand this. If you are calculating GDP, you're trying to find out the market price of goods and services. In the process of manufacturing goods and services, are we not polluting the environment? We are polluting the environment, but we are not accounting for the pollution that we are causing when you calculate GDP. Right? We'll simply calculate what is the market price of all the goods and services and we'll count it. Right? That is basically one more limitation. And do you think GDP will give you data regarding how many population or how many people in India are poor? Just think of it. GDP of India is, let's say, $3.7 trillion. How many people are poor in India? Do you think GDP data will tell you that? How much is the income inequality in India? Do you think GDP will give you that information? Absolutely no. I hope you understand. We do not get all this quality information from GDP. So there are various issues that you can attribute with the calculation of concept of GDP. Done? So these are the limitations or issues related to these indicators, specifically the concept of GDP. Now, there is one more concept, per capita income. Very small idea. Per capita income, PCI, per capita income. Right? For example, yesterday I had asked you, right, as per the latest data published by the government, what is the per capita income of India? Per capita income of India is 1.97 lakh rupees. 1.97 lakh rupees. Now, what is this per capita income? Simple. It is the average income or earnings per person. Now, again, understand this. Whenever you come across the term per capita simply means per head or per person. So, per capita income in India, as per the latest information given by the government of India, is 1.97 lakh rupees. And the formula for the calculation of per capita income is the national income divided by the population of a country. Right? So this is how the NSO, National Statistical Office, will publish per capita income data for Indian economy. But what is this idea? Okay, what is this usage of the per capita income? Right? Understand the logic here. Per capita income is usually used to represent the status of people in the economy. That is basically, when I say status, what is the quality of living of people across the economy? What is the standard of living? Is it okay if I say that per capita income of India, if it increases over a period of time, it represents an improvement in the quality of standard or quality of living or standard of living across India? Again, I'm not talking specifically about 100 people or 200 people or 500 people. What I'm saying is, if the per capita income of India goes up like this, from let's say 1.5 lakh to 1.97 now, 1.97 to let's say, right, 2 lakh crore, I'm sorry, 2 lakh rupees, not 2 lakh crore, 2 lakh rupees, from 2 lakh rupees to 2.5 lakh rupees. If the PCI keeps on increasing, does it not generally indicate that on an average, the standard of living or the quality of living of the people has improved? Will you all agree? Is there any issue with this? Generally, it is an indicator, right? Again, understand this, right? Generally, it is an indicator of improvement in the standard of living. Again, please understand the logic here. I know there is an issue. Some of you will simply say, sir, it doesn't mean that poor people are lower in India. Of course, yes, I did not say that, right? What I'm trying to say is simply understand this. When the earnings of people increase, whether 1%, 2% increase, etc., when the earnings of the people overall in India increases, obviously the quality of living or standard of living will improve. That is why the per capita income is calculated by the government. Okay, now that is point number one. Second one, sir, what is the national income? My dear, if you look at the government of India's calculations, that is the Ministry of Statistics and Program Implementation, which will publish the data for per capita income. Generally, they will calculate per capita income using GDP. They will calculate per capita income even using GNP also. GDP is also used, GNP is also used, right? So you will have to be careful when you look at it. Generally, whenever they appear in the newspaper, they will give you GDP per capita. Okay, GDP per capita. Now have a look at this. Though the per capita income represents the overall standard of living or the quality of living, it is not an indicator without any flaws. There are a lot of flaws. There are various issues that are attributed to per capita income. What are these? One, per capita income is simply an average. Right? Per capita income is simply an average. It doesn't represent what is the actual earnings of all the individuals. What do you mean by this? Let's say there are three people, A, B and C. Let's imagine there are three people. A is earning 100 rupee, B is earning 1000 rupees and let's say C is earning 3000 rupees. Right, total amount of earning will be how much? Right, let's make it easier. Let's assume 3100, so that calculation becomes easier. So 3100, 4100, 4200. Total income earned by the people is 4200. Divided by 3 people, the per capita income will turn out to be 1400 rupees. Simple CSAT calculation. So per capita income is a simple average that you're looking at. It will not give you the exact information about how much is the income earned by individuals in the economy. If you want to make it much more indicative, understand this. If you want to make it much more understandable, let me add one more person D who earns 0 rupees. Then 4200 divided by 4 will be how much? Right? It will be 1050 rupees. 1050. On an average, every person in this group of 4 is earning 1050. But do you think that is an actual indicator of how much they are earning? That basically is representing on an average they are earning this much. But how much is their actual earning? It doesn't indicate it. How much is the income inequality? Will you get the information? You will not get that also. That is one of the biggest issues with per capita income. Second, it does not provide information about the contribution of various sectors. Per capita income in this case, let's say is 1400 in case you assume 3 people, or 1050 rupees if you assume 4 people. But tell me, how much is the contribution of agriculture sector? Can you get that information by looking at per capita income? How much is the contribution from services sector? How much is the contribution from manufacturing sector, etc.? You will not be able to get all of this information looking at the per capita income. Now, some of you will ask me, sir, how? I'm sorry, why do you actually need this kind of a contribution from different sectors? Answer to that is very simple. If you look at the population which is working in India, or the working population in India, somewhere around 45% plus, more than 45% plus of India's population is involved in agriculture sector. Right? I hope you understand this. More than 45% of working population in India is involved in the working population. And when more than 45% of population is involved in the agriculture sector, don't you want to find out what is the contribution of agriculture sector to the national income? Don't you want to find out per farmer how much they are earning, etc.? So if you look at the PCI data, that data will never tell you how much is the per farmer earning in India. How much is the contribution done by agriculture sector to the economy, that will not be indicated there. Standard of living is not just dependent on per capita income. Standard of living is affected by various other parameters such as, let's say, transfer payments provided by the government, assistance provided by the government. Right? What do you mean by this? Let me explain it. In this case, right, imagine 3 people are there, per capita income is 1400 rupees. But does it indicate what is the standard of living of a person A? No. A is earning 100 rupees. Does even 100 rupees represent what is the standard of living right, of person A? Again, the answer is no. Why? What if A is earning 100 rupees? Education is provided free of a cost by the government. Healthcare is provided free of a cost. Let's say transportation subsidies are provided. Don't you think healthcare, education, expenditure on that should be part of standard of living? But because government provides all of this assistance, even the per capita income does not represent what is the actual standard of living of person A. Right? There are various other factors that will have an influence over the standard or the quality of living of person A here. Does not provide the picture about the purchasing power of individuals in different countries. Right? What do you mean by that? Generally, when you talk about, right, the purchasing power of a citizen living in India and a person living, let's say, in USA, there is a difference in the currencies. I hope you understand. India, we use rupees. In USA, we use dollars. Right? So there is a difference of currencies. So per capita income, which is provided in the form of rupees for us, we calculate per capita income in the form of rupees. That per capita income, which is calculated in rupees, does not indicate whether India or the citizens in India are better in terms of purchasing goods and services compared to, let's say, people living in USA. That will not be indicated in per capita income. Why? The currencies are different. Now, some of you will ask, sir, how do we calculate it then? What indicator should we use to compare what is our standard of living, right, with USA standard of living? For that, there is one more indicator called as purchasing power parity. I repeat, generally when the government of India says, for example, the finance minister recently said per capita income of India is, let's say, 1.97 lakh rupees. Now, my question to you people is this. Let's say in USA, per capita income is $2,000 and in India it is 1.97 lakh rupees. Now, my question to you people, who is better placed? Who has a better per capita income? USA's PCI is better or India's PCI is better? How will you come to know? Because the one is given in dollars and the other one is given in rupees. You will not be able to find out. Don't say USA or India for that matter. For comparing the purchasing power, for comparing the quality or the standard of living across countries like this, there is one more concept that is referred to as a purchasing power parity. We'll not discuss it today. Already mentioned, we will discuss it under the concept of international trade. Okay, right? So this is basically the issue related to per capita income. Okay, now next, this is the discussion related to national income aggregates. Next, two more concepts are there: vicious cycle, virtuous cycle, pro-cyclical, counter-cyclical, etc. Current affairs concepts, important in the current affairs context. Before I go forward, any issues so far? Before I go forward, any issues so far? Then how it will become per capita? My dear, if you basically take GDP, divide it by the population of India, it is GDP per capita. Okay. What can be better version of per capita income, which should include agriculture, etc. Now, for that we have different indicators, right? For example, in case of agriculture sector, sectoral, when GDP data is provided, GDP data generally will tell you how much is the contribution coming from agriculture sector, how much is the contribution coming from this, etc., etc. Per capita income doesn't tell you that information. Okay. Why global change FC to MP? I've already answered it. United Nations has come out with a standard methodology for the calculation. That standard is called as SNA, Systems of National Accounts. India has adopted that methodology. Any other doubts? So some tribal people live without single money, but they also have resources. Do we count them as poor? Generally, they are counted as a part of right, poverty. But again, very difficult to account for all of it. PCI annual or monthly? It is annual. Annual, not monthly, annual. But what about jobless people or students? Don't worry about that, right? I'll tell you how the jobless are accounted for in the economy, etc., etc. We'll take it one by one. Again, limit your questions to what I'm discussing. I'm discussing national income. Limit it to that. And don't worry about rest of the things. Okay, done. So next concept is vicious cycle and virtuous cycle. Important current affairs. Vicious cycle and virtuous cycle. Now, what is this vicious cycle and virtuous cycle? Simple answer, right? Don't complicate the things. Whenever you talk about an economy, there is a cycle of events. That is, there are multiple transactions which are happening in the economy which will have influence over each other. For example, sir, what do you mean by this? I've shown a cycle here. Please have a look at the cycle. Right? Government of India imposed a lockdown. Let's go step by step. Government of India imposed a lockdown, and as a result of the imposed lockdown, the demand for goods and services went down. And when the demand for goods and services went down, the production also went down. The unemployment increased in the economy. Then the earnings of the houses also went down. And as a result of all of this, the demand for goods and services again went down, and the cycle will keep on happening all over again. Now, anybody says, sir, how this event is happening, let me know. Anybody who says, sir, I did not understand this, I'll write numbers so that you understand. 1, 2, 3, 4, 5. Right? Any difficulty in understanding the steps here, let me know. What I'm trying to explain to you is, there are events which are taking place in the economy, which are cyclical in nature, and because these events are connected with each other, either one of the two things will happen. One, the overall outcome in the economy will be positive, or the overall outcome in the economy will be negative. Whenever the outcomes in the economy because of the cycle is positive, it is called as a virtuous cycle. I'll repeat it. Whenever the overall outcomes in the economy are positive because of the events in the cycle, it is called as a virtuous cycle. And whenever the overall outcomes in the economy because of the cycle are negative, that cycle is called as a vicious cycle of growth. Sir, what do you mean when you say positive outcomes or negative outcomes? Positive outcomes such as rising demand. Increasing demand is generally a good indicator. Generally, not always, because there is a concept of inflation, which is the next chapter after the lunch. Don't worry. Second, let's say higher employment, higher GDP. Don't you think if the employment goes up, GDP increases, right, and the demand goes up, these are good indicators or positive indicators for the economy. Anybody disagrees, let me know. Let me know. Right, so the argument is simple here. There are events which are going to take place in the economy which are connected with each other. As a result of these connections, if there is a positive outcome in the economy, that cycle is called as a virtuous cycle. On the other hand, if these interconnected events result in negative outcomes such as higher unemployment rate, lower GDP, right, or crashing GDP, crashing or crash in the demand for goods and services, all these are negative indicators. Such a cycle is called as a vicious cycle of growth. Right? Any difficulty in understanding what is virtuous cycle, what is a vicious cycle, let me know right now. Because after this, we'll take a lunch break. Right? Done. We'll take a lunch break. One more concept is there. We'll take it after the lunch break. Any issues so far, let me know. Sir, what is virtuous cycle? I'll repeat it again. Cycle means there are events. All of you will agree. Cycle means what? Right? Same rotation is happening. Right? So there are interconnected events in a cycle. As a result of these connected events, if the outcomes are positive, if the outcomes are good for the economy, such a cycle is called as virtuous cycle in the economy. Such as, let's say, sir, how can you achieve virtuous cycle? I'll give a very simple example. Imagine investments will happen in the economy. In fact, we have discussed this yesterday also, without using the term virtuous. If the investments will take place in the economy, you tell me, what do you think will happen to employment? If government will start investing, private sector will start investing, don't you think the employment requirement will start increasing? If more and more people get jobs, what will happen to the salaries that are earned by the houses? What do you think salaries earned by the houses? What do you think will happen to that? Salaries or incomes earned by the houses will increase. Now next, if salary earned by the houses will increase, what will happen to demand for goods and services? The demand for goods and services will also increase. And when the demand increases, next, what will happen to production of goods and services? Increases. If there is a rising production, again, what will happen to employment generation? Employment generation will increase. Now tell me, is it not a continuous cycle? Don't you think this cycle will keep on happening again and again? But this cycle is leading to good outcomes for the economy. People are earning more. More and more people are getting jobs. GDP is increasing. Virtuous cycle. But in this cycle, unemployment is increasing. GDP is going down. Right? Household earnings are going down. Vicious cycle. So one is vicious cycle and the other one is virtuous cycle. Now let me connect it to current affairs. Some of you are asking, why should I read it? Tell me what has been the proposal of expenditure by the government. In the last couple of years, you tell me, has the government of India increased the expenditure or decreased the expenditure? I hope you understand this. The government of India in the last couple of years, and I'm asking this question because it is connected to current affairs. Sir, what current affairs? Budget. Haven't you heard in the budget where finance minister has stated last year our expenditure was 7.5 lakh crore rupees. Again, please understand, expenditure on assets, infrastructure, right? That is important. So last year our capital expenditure was 7.5 lakh crore rupees. This year we have increased it to 10 lakh crore. Now when government will spend more and more money like this, don't you think infrastructure would be developed? When government will start spending money on infrastructure, employment would be generated. Employment generated means, again, logic is simple. Salaries or incomes earned by houses will increase. And that will result in higher demand, higher production, and the cycle is expected to happen like this. That is the basic argument here. That's a basic argument. So one is vicious cycle, another one is virtuous cycle. Okay, so this is vicious and virtuous, very often cited in the newspaper. Please be careful. Next one is a pro and counter, which I'll take up after the lunch break. But before I take a lunch break, please have a look at the terminology here. There is a term called as business cycle. And if you remember yesterday's class, I told you, right? In fact, I'll tell you the context also. When we were discussing capitalism, one of the issues related to capitalism was that it will lead to business cycle. I hope you remember, I hope you have revised. One of the issues related to capitalism was it will lead to business cycle in the economy. And I told you yesterday, we'll discuss it tomorrow. I'll take up what is the concept of business cycle, why it is an outcome of the capitalism. We'll understand it after the lunch break. And we'll connect it to one more current affairs concept, that is the idea of pro and counter cyclical policy. Okay, right? So this is the discussion. If you have any questions, let me know. Employment increases, then the salary is not increased because more people than less salary. How, my dear? Imagine there are two people who are working in the company and I will hire two more people. Does it mean that I will reduce the salary of the first two people? Where have you seen it? If you think it is correct, don't you think there are a lot of IAS officers already under Government of India? If you become IAS officer, will Government of India reduce the salary of existing IAS officers? How? Just think of it. It doesn't make any sense. Any questions? Let me know. In present virtuous cycle example is Pakistan, Sri Lanka. Okay, vicious cycle. In Pakistan and Sri Lanka, you are not seeing a virtuous cycle, you are seeing a vicious cycle. Unemployment is very high, production is very low, GDP is very low. Vicious cycle, not virtuous cycle. Okay, Done? Sir, if this keeps on happening, then the economy will collapse? Of course, yes. In fact, when there is a virtuous cycle, after the lunch break, I'll tell you, economy, that is GDP, might fall into, let's say, recession, might fall into depression, etc. Right? So there is a possibility there. Okay? Done. Any doubts? Any doubts? Okay, let's take the lunch break now. Let's take a lunch break. We will continue it after the lunch break. So I'll restart at 2:10. I'll restart the session at 2:10. Right? Please join. Right? To the next session, 2:10. Then we'll take up pro and counter. Then we'll take up inflation. Inflation is also very, very relevant, very important for the examination. Okay? Take care. See you after the lunch break.